comes down, gives us really a double bottom. We look for a pullback into long-term guppies, and then we look for a trade away. We look for it to trade back to the floor here. So we literally had an entry back near the open of the session here, and we're trading it down to an area. We'll look for a break and then continuation. Okay, so in that case, I can step into a trade earlier than having to sit here and wait now for it to get down to the label of the sell. I can actually step in sooner and see if we get a follow through on that. Okay. Now this isn't a training session here, folks, that we're trading right now. We'll look for the next setup. Okay. So Thomas, if you're looking for the next setup, since we're already into this, the next setup would be like what most retail traders do. They look for a break of the floor. What we're trying to do is do a little technique like professional traders do, get in at a better price. There's a technique that I share with everyone in the room about getting in at a better price, having more balanced risk reward. Okay? So we follow this little pattern. So we're having another little setup here with the dots guppy that we're getting more separation between the yellow line and the purple line, which is the 15 and 30 moving average of the guppies. Let me see if we getting some more alerts here. That euro pound that I talked about, I said, guys, there could be another potential trade. I mentioned to y'all, look for the push back to test the inside range low. We're sitting right at the sell entry level. This is a potential trade. Should we get the follow through? This is a nice looking setup. Okay. So I'm looking for a short here on the euro pound. Hey, Sonny, good to see you. Was that Sonny that I just saw? Was he here just a second ago? It's more important one detail. Yeah. Oh, Sonny, was your moderator thing not working today? John, members, if you're a member of the room, John, I will. I can email that to you. If you're a member of the room, you get that's provided for you, but it's not a free indicator. Okay, guys, I'm watching this euro pound. Okay, there goes the Aussie. See that hidden divergence kick in? The hidden divergence kicked in, and up we go in that Aussie. There it goes. See, this is what I was talking about earlier. Potential profit taking, getting people thinking that now we're in, that was just profit taking going on. We get a pullback here. See, from, I'm going to call it that low to the high here. Look at that, a move right to the 23.6. Retrace to the 23.6, hidden divergence. That's a sign of continuation. Get a little pop back up. If anybody was watching that Aussie and saw the setup here, there was a little setup right there for a potential pop back to the upside. I'm not, right now, I'm not holding long Aussie, okay? We're seeing a big drop back down the pound Aussie here. There's the euro yen pushing down, guys, pushing right down. There's that trade we talked about earlier, push down right there. Swissy really not doing anything. I stepped into the Swiss earlier, but really not seeing much out of that guy just yet. Yen still slipping down. It's not done yet, guys. Hey, Ernesto. I'm killing the good. Good to hear. How you doing there? Haven't seen you in a while, Ernesto. You doing all right? Hey Larry, good morning to you. If you want to learn more about joining us here in the Dodge Trade Room, you can click on that link. It'll give you the breakdown of what we do. The room's open from Sunday evening through Friday afternoon. It's open 24 hours a day. I come in during the New York session and I moderate for the first about 3 hours. Then we do a training. We do some trading. We do some training. Sometimes I come back in during the Asian session for a little bit. Sometimes I'm here during the London session. Usually, though, I'm not on the mic in those sessions. Usually, I'm just updating some chat, seeing some things in the marketplace. But we have folks who trade around the clock in this room. So there's that Euro Aussie pushing back down. We talked about the possibility of the Euro Aussie pushing back down, guys. So we're seeing that push with that Aussie pushing up. Okay, remember, Aussie dollar up, Euro Aussie down, pound Aussie down. In the opposite direction here. So we're getting those, and this is setting the floor. He's breaking this low. We could see that Euro Aussie push lower. Okay, this is a setup right here. Now, if I step down to the 5-minute, look at that little setup we got right now. See how I talked about earlier how the market will come down, pull back into the long-term guppies, and then we push down away. So this is another potential trade, and we'll be looking for a move on the break here. The previous low is right here. That's yesterday's low. So we could get that continual slide should that Aussie dollar continue to push up. We're going to look to see, does he break yesterday's high? Okay, this is what we're going to be watching for. We're seeing the hidden divergence come into play and the push to the upside on it. Tony, yes. Okay, but Tony, and I want everybody to know, when I come in this room, this is not me giving you signals to trade, okay? We're teaching you how to look for setups. Keep it simple. I use very simple technique. I consider them simple techniques, but literally there's techniques that's a 1, 2, 3, 4-step process where you read the market. You can ask people in the room about the 1, 2, 3, 4. You can, while you're here, you're more than welcome to say, hey, and you may even see me do it, but it's a way of reading the market. Let the market tell you what's going on, okay? And we look for these setups. Now, I realize that for some of you new to the room here, there goes that Euro Aussie down, guys. There was a setup right there. Beautiful little setup. I'm looking for the push down. I am short that. Okay, I am short that. Okay, now here's and I know some of you may be saying, "Whoa," but why did you here? Not let me just get back to my original Here's the original dots guppy setup. Okay, which you have the guppies, your normal candlesticks. Okay, and some of you may be wondering, why are you entering up here instead of waiting to get down to that sell level? Okay, I want to let everybody know the market doesn't follow the dots. The dots follows the market. If the market is in an average range, then it's going to be lined up. These will be lined up. We have not been in average range. If you look at last night, this big downward action we've had and the FOMC, we're not in our normal everyday range and everyday cycle, if you want to put it that way. Okay, so this has been shifted down. Our dots level, since dots is designed to look at historical price patterns matched to current price, the market is expanding or contracting, so levels have been shifted. Okay, and I'll show you that if you look at, let's say we look at the Aussie session. Okay, if we look at the Aussie session, see how the levels were to the upside here? These are the Aussie session levels. Let me get back here on the 15-minute. Here are the Aussie session levels. Then you look at the European session levels. Whoops. And you can see they've shifted down. And now we're coming into the US session, the New York session, and you can see they shifted down again. Okay? So in this process, we're looking for those high probable levels. But if I have a good setup, the market's telling me here's a setup, I don't have to wait to get to what is labeled, quote unquote, labeled a sell entry level. I can use one of my other high probable levels if I have a proper setup. And we did. We had a beautiful little setup right here, and something I'm going to teach you in this room. If you missed this back here, this was a beautiful setup back here. Okay, beautiful setup here. And on top of that, we had a range. Right here was a little range. You see that? Okay, you had a beautiful setup in the Asian. Was this? No, this is European Open here. Beautiful setup. The market comes down, comes off, test, but then it finds itself banging around inside of a range. Okay, and remember, guys, I've talked about how the market will kind of be range bound, sort of in a range sort of thing. There we go. There's the range over there, and then go from range to range. And where does it find itself in again? Another range. And what's it trying to do? Break down. So we're getting a little breakdown here, okay? We had a nice little setup here, and on top of that, as it went into the long-term guppies and tested, I don't have to sit here and go like, well, I'm not going to do anything until the market gets down to this level. So I understand that we don't have a normal range cycle. What I do know is that what the market has done, and I know these high probable levels, and I can sit here, and I can trade from level to level to level. So this has moved down a bit. We're testing here, and I haven't taken a look at what's going on some of these other pairs. What's going on here? Euro's just sitting there. There's the yen bouncing back up. Yen's bouncing back up. That's what's causing the euro yen bounce back up. So if y'all got some of that, where is it? There's the euro yen. Here we go. I'm trying to watch what it's doing here. Get a little bounce back to the upside with that yen, but the euro's just sitting there flat doing nothing. A little quick bounce up. That's not an indication to go into the yen just yet, but we get a little pop back up. We've got 1, 2, 3, 4, 5, 6 candles to the downside. It's a little profit taking coming in. We'll see if it establishes itself, but we haven't seen a rollover yet. We do have that higher low. We'll see what he does here. But he's trying to set in a bottom, and we may see an upward action here. So he's crossing over. We'll see if we get a test. This is not the prettiest look. Okay. We're testing into long-term guppies here on the 15-minute. And if I put on the... now this is starting to show upward action here. Starting to show some potential upward action. I want to see how this settles itself and if we actually have a turn here or not. See that falling off, market baseline above. We'll see if this is just a quick up and down, and then if we come back down and test again, lower, or if this was our test. But I'd like to have seen this come down and hit this line, and that had been a 3-hit line, a diagonal trend line on 3 hits. That is a long bias action. Hey guys, I apologize. I'm trying to focus my attention on the trading. Not seeing a lot of the questions right now. Looking to see what the market's going to do here. Mark, you can. We can talk about in more detail. A lot of times what I'd like to do, Mark, as far as my stop loss, is look at the previous swing high or the previous swing low and be a bit from that. Thank you, William, for answering that. When I say alligator mouth, that's the term that we use when we see separation in the long-term guppies compared to the short-term guppies. If you're not familiar with guppies, that's okay. We'll cover that. But you can see it right here. You can see it right up here. You can see the separation of the short-term guppies. I'm on the Euro Aussie. Short-term guppies, long-term guppies, and I like to trade in the direction of the long-term guppies. It's more favorable. Now again, today's kind of an interesting day. We're a Friday after FOMC. I've mentioned this before. If you just now join us, you know, the market's in a kind of a turmoil. The market's bubbling here. Some people want profits. Some people want continuation of what the Fed's done. Others are sitting pretty heavy in an opposite direction trade, like the euro. A lot of big firms right now are holding euro dollar shorts. Okay. Now they've eased up on some of them, but they're still, their long-term outlook is still short the euro dollar. That's not it. Oh, I'm sorry, let me get this out of the way. Okay, where is it? What am I looking for? Like, for instance, I've been talking about the euro dollar. Okay, here's just one comment from a group today. There's one comment about the euro dollar. So, market remains well capped ahead of some key internal resistance in the 1400s. Overall, the medium-term downtrend remains fully intact, with the focus remaining on the downside for a drop towards the 1080. The 108, sorry. Initial support comes in at 1087. The mother lost my. I don't know. Let me see. Sonny, were you not able to get in as a moderator today? Maybe you mentioned, but I thought we had you down for that. Maybe we can have Bill follow up with you. Yeah, the mother-in-law's mouth. So, that's great. You're fine, Sonny. You're great. If you're okay, I didn't know if you want to jump on the mic or not, but you're fine and dandy where you're at. Didn't want to make you feel or have you feel like you were left out. Thanks for answering. Yeah, Philippe, what I'm looking at here, guys, and we've added a couple things. I don't want this to be confusing anybody, but what we've done in this room is we've taken, someone give me a currency pair real quick. I'm still watching the market here for some possibilities, but somebody give me a currency pair. I want to kind of walk you through a little bit of what we do. Okay, Thomas, the pound dollar. Okay, I'm just going to take a bare bones blank pound dollar chart. Market's kind of a little bit flat right now. So let me just real quickly, I'm going to show you something. This is what we've done here. Okay, so we start with the bare bones blank chart. Now there's a lot right here that people don't see. You got a declining double top possibility. You did have a 3 higher lows to push to the upside. You've worked this. Let me see if I step out a little bit. We've had a 1, a flat, a 2, a flat, and a 3 to the upside. It's about time for us to see a possible turn back over. But a lot of people don't see that stuff. So let me show you what we've done here. What I've done. A lot of people along the way, actually not me. I just started out with this. Let me put it this way. Here was my thought. My thought was you already had a trading system. You already had a model that was working for you. You just wanted confirmation as to where you could potentially get in or get out of the market. Okay, so I developed an algorithm that could share with you where to potentially into the market, where to potentially exit the market. These are very high probable levels. This algorithm has been around. We introduced it in 2012. It took me a couple of years of development and testing. It's based on very similar rules that are used in the algorithmic world. I had a good friend of mine allow me to see what was behind the veil of the algorithmic world on Wall Street, and it really opened my eyes to things that go on. But when 70% or 75% of the Forex market is ran by algorithms, it really helps us to see these high probable levels based on no indicators, nothing but price. And so we're looking at current price matched historical price, and looking to see if the market's expanding or contracting. The market's been expanding here. So we have these levels here, and I thought, well, you know what? You just take whatever trading model you got and put it on here. Come to find out, most people don't have a consistent trading model. But if you do, this is just a great addition because it sits over in the right hand of the chart. We've also added what the previous session low is and what the average daily range, high and low expectations are for. And what I did was I have it on a 5-day. But you can have 20-day, 10-day, whatever it is you want. Now, Sonny, one of the traders here in the room, kept sending me an email saying, I'm just kicking it. He was, he's doing 100, 200 pips a day, doing over and over and over again. And he's like, yeah, we really do need to talk, Dean. Sonny is a retired floor broker or floor trader. Been at it well over 40 years at it. And he's like, you got to add something to your chart. And that's the Guppy multiple moving average, which has been around since 1985 and have proven themselves time and time again. So we then added and built a template to where we add that to our chart or to our Guppies. Now we have a system. We actually have a complete method. We have the long-term Guppies, which are the direction of the market. Well, we have the short-term Guppies, which are the here and now, the strength, the momentum. We have short-term traders, and what they're attempting to do, are they going in the direction of the long-term traders or the institutions, okay? And so they're going to fight back and forth. Typically, who wins out? Not the short-term traders. The long-term traders usually win out. So like in this case, we did have the FOMC announcement, but there are places along the way where we get these pops, we get these pushes away from the long-term Guppies, and gives us opportunity. Okay, so there's an opportunity here. Now, I'm not throwing out all the other things along the way I've learned. I know that there's a double top action going on right now. Do you see it? So with this double top action, I'm going to allow this to sink back down, but based on a 15-minute chart, there's real no trade here because I'm trading against the long-term Guppies. I'm looking for higher probable trades. So when we got this bounce earlier, right at the start of the U.S. session, we got this bounce up in the direction of long-term Guppies. We had a nice little trade. And I could have, just a simple trade, little trade, and I could trade this from level to level. I don't have to sit there and wait for the market to get to a buy entry because, like I've already explained, the market's a bit stretched out of its range right now. But look what this did. It went right to the level. Pinned a little bit high to test the previous high, couldn't do it, and fell and has fallen back over. Where did it fall back to? Right to the open of the New York session. Now we're pushed down right to the next level. The market has tendency, it's amazing, the market's doing whatever the market's doing, but these levels, look how it just hit that level and bounced off of it. This algorithm of dots is just, it's incredible what it does. And we've tracked it for 3 years now. And we've made updates so things get a little bit better for you as a trader, but the core algorithm hasn't changed since we first launched it, and we've tracked it. So, and I'm not going to get into all that. Now, what we've done in the room is we've just added a few additional components. So, what happens if the market goes beyond these levels, like we've seen over the last couple of days? We added what I call the bank trader strategy, where we get to see where the typical part of the market is. We get to see the midpoint. This strategy that you see here is based on what bank traders look for the following day based upon what happened yesterday. Okay, so you can see how the market pushed up from the open of the day up to yesterday's high We pushed up, and look what it tagged. I want everybody to see this. I want everybody to see this. It tagged right at a level that was given to you at the start of the day. It tagged it right there. Came back, settled on yesterday's high, and it pushed up. Now, we're not looking at the DOTS levels for the European session, but it came up, settled back down, and almost back to that same level. We see this time and time again. Overnight, we pushed up to the weekly high target number 2. Settled back down, or we dropped from the open down to this level that you knew at the start of the day. So this is all based on the algorithms that go on Wall Street and Tokyo's money center and Singapore and Australia and everywhere at London, all around the world. Now, what we do as traders in this room is we look for setups, and we trade those setups, and we allow ourselves to see what the algorithm or the algorithmic world is doing and take advantage of it. Okay? And have an idea of where they may be going to. So this has sunk down, and notice how yesterday's high and the buy stop loss sitting at the same point. Okay? So anyway, that's just a brief overview, and that's not everything that we get into, but there's a complete setup here, complete trade setup right there. And there was one this morning. There was one this morning right here, right at the open, to take for just a few. It wasn't much, but about 15 pips was right there for the taking. Okay? And that's what we do every day here in the room. And we've got some great traders here in the room. Okay? Now, guys, I did get knocked out of my Swissy. So that Swiss trade, I got stopped down to Swissy on a bounce back up. So let's stop down. Just minus 20. I told you I was going to put it right above the swing high. He started pushing back down. Sometimes they don't work out. So I'm stopped down with minus 20 on that one. I'm still up about 57 pips or so in the Euro Yen. The Euro Yen, by the way, did come down and hit the floor that we were looking for. Okay, but I'm looking for a break of the floor here. Robert, join the room and we'll go into the specifics on the bank trader strategy, okay? There are people that paid to be in this room, and I promised them I wouldn't give away all of our goodies, okay? You have the opportunity to come in, kick the tires, see if it's something you want to be a part of, but I promised the folks who paid to be here to learn this, that what goes on here stays here. So I'm not going to get into all the very specifics, but there is a very definite reason why you have the green area, you have the blue area, and you have the pink area. Okay. The room is $97 a month, folks. And I don't know. You ask people what their thoughts are about the room. Okay. Rick, for instance, right there. Rick just posted. Just listen if you want to trade. Rick can tell you what he's done. So here in the room, actually, Rick was very kind, wrote me an email that in his very first month in the room, just absorbing what we're doing, watching what we're doing, trading along with us in the room. He had put, according to his email, was something like 500 pips, and the month wasn't over yet. So I'm not saying that's going to happen for you, okay? And not everybody's doing that here. But if you apply what we teach here in this room, you will be putting pips on the board, okay? Okay, so the yen here, he's testing back up after that break. Some of y'all might have taken that, but we're just now starting to get a potential hook back to the upside, a push back to the upside. I'm going to watch to see how this guy plays out. He's right at the buy entry level. I want to see how this pans out because notice how he came right back up to the top here. right back up to the top, right there. He's sitting right at the buy entry level, right also at the ADR low level of the day. Let's see what let's see what this guy's showing us. Upward movement. We'll see if we get a little push down and then a bounce back away. If that's the case, we might have a long yen trade here. Okay, might have a long yen trade set up. We'll get an alligator mouth starting to develop right here. Okay, so there is a potential setup. Okay, now potential setup doesn't mean click the button, time to get in. By the way, if you click the button to take a trade on something I say in the room, we're all big boys, big girls, so don't send me an email that you lost your whole account because of something I said in the room, that I was the one who told you to take that trade. I'm not making any trade recommendations here. You're having the opportunity to look over my shoulder and see what I do and hear my thoughts about what's going on in the market here. So if you pull the trigger, it's on you, not on me. So anyway, there's no guarantees in trading is all I'm getting at. So, okay, the Aussie playing, man, that thing is just messy right now. It's a tough little market right now. Like I said, are we profit taking? Are we continuing? See, this is still back and forth. Now he's starting to break down a little bit here. That's on the 5 minute. Let's see what the 15 minute is showing. Okay, now on the 15 minute, he's just got a little bit more to go here. He's got to break that low so we get a nice little turnover here and possible continuation short in the Aussie dollar to the downside. Be careful though, it ain't done yet. What's starting to develop here looks like a possible head and shoulders, but it's got to make another bounce. There's the head. I'm sorry, there's a shoulder, double knotted head, or a kind of a rounding top head there. This could give us another up move like so, and if we get a lower shoulder right here and then a move back down, okay, then we'll have our head and shoulders set and we'll be looking for that possible downward action. Okay, but right now the long-term guppies are still, you know, there could still be that push to the upside. And one of the firms today had made the comment that they're looking to buy on dips. So be careful on this one. I don't know if this is one that has decided yet, but he could just rattle around here on this Friday. There's no other real news in the market right now. In about 10 minutes, we're going to get the leading index number. Then we have FOMC member Williams speaking a little bit later today, and that's really it. Okay, this is a up. I like what I see in the TDI. This is on the 5 minute, so let me see here. Still going against the grain here. It's not the most favorable look, but I like what I see here. There's a possible trade here, but I don't like what I see on the long term guppies there. But we could still rise up. Let me see what the hourly looks like. Yeah, we could. We're kind of in this pullback phase. We're coming in and we're testing this little area over here. There's an area of liquidity right there. So if it gets through this little area, because we're probably running into some possible sell limits around the 119.50 area. If we get through that and test, then we get another push back up into the next level of liquidity, which is going to be sitting right up in this area here. Be another little area of liquidity sitting right up near the open of the day. Traders Dynamic Index still suggesting downward action here. Now, if you're down that 5 minute chart and you're a scalper, okay, there is that potential if it breaks through here and pushes on up, because we already know on the hourly it's got a ways to go to do a retrace of the day. Now, if you're more of the conservative trader, this isn't a trade for you. Okay, but we have pushed up to the 23.6 on the hourly here. So if we only push up to 23.6 and that's all we get, then I'm going to be looking for the roll back over. And that's what I'm talking about here. Give me a double bottom. Give me something that says we've set the bottom and now it's time to work back up. Now if you step down, I'm not trying to confuse anybody. I'm just trying to really read the market here. On the 15-minute, we show an inclining bottom, and we show it's starting to increase its strength to the upside. Just the bias of the trend lines and the TDI suggesting upward movement. So we could see it try to push back up here a bit, but it's got to fight through this area. So it is sitting here at a buy entry. Okay, so what I'm simply done is this, guys. I've taken you from that look, okay, or should I say this look, and I'm giving you reasons that this may not be a favorable trade. There's things about the market that here you don't see that may not be a favorable trade for you. You've got to be mindful of what's going on here. We did get a little pullback and a punch up. So I'm just making you aware that if you're long this, you're fighting it. You're fighting a battle. Yes, it was, Philippe. There's a nice little pin bar back. Correct. So I have different folks here in the room. I've got scalpers in the room. I've got folks who are more the conservative type. Okay. So I'm trying to let everyone know, your advantages, disadvantages, how you need to see this. Are you in just for a few pips? Possible push back up into this little area back over here. But be careful because on the bigger picture, we may not be set just yet. The levels don't change. Okay, I can go to the 30-minute. I can go to the hour chart. Levels don't change. Okay? And on top of that, the market rarely does a V-shaped bottom. Rarely does a V-shaped bottom. When it makes a bottom, it's usually a double bottom. A flat double bottom or an inclining double bottom, but rarely does it do a V. Okay? And we have a V shape going on right now. So there's a little bit of potential here, but we're running into liquidity over here. Okay? So I'm going to make you aware in the room as we trade, like I did yesterday. I was mentioning to folks yesterday that we had an inverse head and shoulders pattern right here. There's an inverse head and shoulders pattern right there with a declining neckline. I don't know if you see it or not. And I made folks aware of that yesterday as we were trading. We had that set up. Okay, what did the market do? The market came back. This trend line here, basically, market came back, tested the trend line, tested the low, and pushed higher. And this was before the FOMC stuff, or was this the previous day? So I'm going to make you aware of those sort of things that happen in the marketplace. Okay. Oh, I'm sorry. That said euro on it. That's not the euro dollar. I apologize. That was the dollar yen we were just looking at, folks, not the euro dollar. So let me put it back. I'll just kind of build back what I had, taking it from the New York Open look, and then I'm just going to modify a few things. I've got a few tools that you're going to get access to here in the room, like my average price bars that give me the trend of the direction, or direction of the market based upon the underlying trend. Nice, Alper. Nice job. Well done. Okay, the pound Aussie back up where he was, took a pretty strong drop down. Still kind of in a range here. Euro Aussie kind of in a range as that Aussie's coming back over a bit. Sentiment meter's pretty well gone flat. Well, you know what? You got yourself 20 pips. Good job. You probably got some other ones too, but good job on that. I saw a question earlier. I'm going to answer it. Someone asked me where they could learn more about dots. There's the dots method. If you want to learn more about, join us here in the room. Here's the link for that. Yes, there are, Stephen. There are. I mean, how many? Hey guys, those who are typical in the room, how many training videos would you say that we have on all these various topics? I think we're near too many. Okay, never mind. I won't ask you again. Oh, it's not that many. Okay. Ask a dumb question, you get a dumb answer. Is that it? No, we have some pretty good videos, and we have other traders that I work with, like Gene and other traders that help me in doing some of these training videos. Okay, but we have videos on various subjects, various tools. I don't want to overcomplicate the trading. I know if you're looking at the charts, you may go like, man, there's just a lot on the chart, but there's really not. If I take any chart and I start peeling the chart away, if I take away my average daily range calculator and I delete that off the chart, you don't see much move. If I delete off the bank trader strategy, if I delete that, all I deleted was levels that bank traders are looking for. Okay, then if I delete the dots, I go back to my indicator list. If I delete the dots method, there goes the dots. If I delete the moving averages, which make up the guppies, oh wait a sec, there's one more tool. If I delete my average price bars, if I delete that, what we're left with are the moving averages. There's not a lot here, but it looks like there's a lot, and it may look confusing, but it's really not. All we want to know, if I put it this way, if I were to sit down with you and say, would you like to know what the big boys are looking at? And they look at it every day, and they're aiming for these levels every day, I'm sure you'd say, yeah, tell me where those are. Here they are. And you can see, look at this level here. And I'm not lying to you, folks. Give me any currency. We go through this all day long. But how the market literally moved right down to yesterday's, let me open this up a bit so you see, right down to yesterday's low. Before that, came down to my average daily range low. Came down and hit the daily midpoint. Market drops down and goes right down to our LT2. Levels that you knew at the start of the day, it went right to. And this happens over and over and over every single day. Now this market is stretched. This is the weekly target number 2 level. So we are definitely overstretched to the downside. This is last week's low. Right here, this line right here, this last week's low. Market pushed through it like there was no tomorrow. And on top of that, we dropped below yesterday. That was last week's low. This was yesterday's low where the FOMC statement came out. Market pushed through it, tested yesterday's low, and then pushed away. And it pushed right down to a target level that you knew. And what's the market done now? Pushed back to test yesterday's low. So old resistance, I'm sorry, old support, is it new resistance, or are we trying to work our way through it? All right, let me see if there's any other trades here. We're at the top of the hour, 10 o'clock. Got the leading index coming out. It comes out 0.1, worse than expected. They were looking for a 0.2, but better than last month. Last month was negative 0.2. Excellent, Alper. Very good job. Very good job. Yes, it did, Gene. It certainly did hit the 127.2. Absolutely. Right at it. Now, I am scalping long the dollar yen. Okay, I am scalping long the dollar yen. We talked about that possible little setup right there. I went into little details on it. So I'm up about 7, 8, 9 pips in it. I'd really like a nice trending trade, but we're not in a trending market today. Or if we had the trending during the European session, we don't have any real trends going on here in the New York session. So I'm looking for the possibility here. I'm crazy about it here, but we got a low, lower low, the higher low. We are getting into that on the 5-minute chart. We are getting into, they've got the kind of a guppy, the dots guppy alligator mouth sort of look here, the separation between the short-term guppies and long-term guppy. Plus we have a rollover here, looking for that upside action. Trying to hold that trend line. Oh, by the way, yeah, when you get the dots method, if you're interested in the dots method, you get 30 days here in the room free. And you get all the goodies. That you get the bank trader strategy, you get the J-hook strategy, you get the 1, 2, 3, 4 step process strategy. I'm going to share with you the master candle strategy, which is a great strategy, especially if you're on a 1 hour, 4 hour chart. You like to look at those, or you've been trying to find something to trade on a 1 hour, 4 hour. The master candle is a great strategy for that. Trying to go through my mind on some of the other. Those are, and then obviously with the average daily range calculator, I'm going to provide that for you as well. This is for me, after 20 years of trading, this is clear for me. I don't even need an indicator on my chart. I like to use the Traders Dynamic Index. You'll get that as well. The Traders Dynamic Index is an indicator that I developed back in 2004. Showed it to a few friends in 2005. Actually gave them the source code and didn't really think much about it. But now the Traders Dynamic Index has gone worldwide. It's been built into TradeStation. It's been built into NinjaTrader. It's been built in. People have taken the open source code that I gave and have gone crazy with this indicator. As a matter of fact, I've heard that there's a number of professional traders, and I've actually had some professionals from Wall Street call me and ask me to break this thing down for them. What are they seeing? And the beautiful thing about it, it gives you a heads up on things. You can see divergence in it. You can see how to stay into a trade over a period of time. When not to get into a trade, when to stay in a trade, when to look for the turn before it happens, maybe even to keep you out of some bad trades when you look for certain things. So it's become a great tool. And then we have a modified version of this that we've added the request. Now, I will be coming out in the near future. Look, I'm already working on development to where it will actually show you divergence on your charts. So I'm already working on that one forthcoming. That'll be a separate thing altogether. But anyway, I see here we don't really have any divergence going on. This is a nice little move to the upside. Market baseline, the yellow line, still moving up to the upside. So this trade's turning out pretty nice. I'm up about 15 pips in it. Oh, sorry, I forgot to post it. So we were talking about it, and I, so what I'm looking for here in this is the, I'd like to see it push up. Now I realized where the liquidity was sitting in on this guy. So I'm looking at this guy for the possibility of getting up to the buy target number 1. It's a high probable level. Plus we have yesterday's low sitting right there. Okay. It's already reached a certain level. It broke this area right here, coming into this little area right there. I'm going to step out on the hourly chart, and you see that I've got some stuff. I've got these lows over here, so there's some liquidity. It finally pushed through this area of sell limits over here, and now it's coming into this little area. Okay, we're into that little area right there. Okay, and you can see where that low came in. So we may be pushing, got to push through there. I'd like to see that push back up. And if I take from the high of yesterday to the low of today, I'd like to see it push back to the 38.2. And look at that, the 38.2 is right back at yesterday's low. So if you're following along with me on this setup based on the 5-minute chart, okay, this is based on a 5-minute chart setup, okay, and we had a nice little setup, really had nice potential right down there I talked about, but we knew we were going against the grain to some degree because I was looking for that drop down to, remember I mentioned I was looking for that drop down to here and then up. It didn't quite get there, but it did sit on the LT2. So right now I'm looking for this to let's see what I've got here. I'd like to see this guy. Let's see what we got here. Where's that up at? See if it gets on up there. I've got kind of a long forecast here on it. We'll see what it does here. But there's the trade right there from where we got in at. I'm looking forward to push on up. So let me look at some other trades here for some other setups. Yes, Stephen, there is the dots method. Okay. Now you can join the room, okay? But if you want all the goodies, you want the bank trader strategy, you want these other tools, that's part of the dots method purchase. Just joining the room doesn't give you access to all the stuff. People have paid for all these items that we provide, okay? It's a one-time purchase, and I provide all the goods and updates and training and teachings and just on and on and on. Plus, we sit here and we call trades. But you're more than welcome to join the room if you'd like. And then just follow along with us. There are folks in the room that don't have the sentiment meter. This is a great tool that we developed, or myself and another trader here in the room is a good programmer. I had this idea. A lot of us have seen kind of a strength meter, but we don't really know how to use the strength meter or what pairs we need to be looking at. What this does, the strength meter, it literally identifies what currency pairs are flat right now. And look how flat the market is. A lot of gray. And then identifies currency pairs that have a suggested sentiment in the market based upon upticks and downticks and the average of those upticks and downticks coming in the market. So right now we have the Euro Kiwi showing red. It's pushing back a little bit, but overall still the sentiment is short this. Okay, now that may change. I've seen it go to pink, which is a setup like the EuroCAD. EuroCAD's setting here, potential short again. This pink color is letting you know that there's a potential. I'm watching these rise back up, okay, as the yen pushes back up. Okay, there's that Euro Yen position I'm in. So I've got a 20 pip stop tied into it. I'm allowing it to push back up a little bit, but I want to see it kind of slide back over. I'm watching what the Euro's doing, but the Yen's gaining some strength here. Okay, so I'm watching to see what that's doing. Euro Aussie made got some nice little push on it as the Aussie's coming back over. The free steak knives. The free steak knives. Oh man. It should be $97 for the indicators and $600 for the room. Thanks, Michael. That's okay with me. Oh man, tough little market we got going on today. Can't tell if we got profit taking going on, reversals going on. Wanted to do a little trending action in some instances, but it looks like we're getting some profit taking going on with the pound coming over. Pound's coming over. Back to 56. Oh, Fridays can be tough, Philippe. Yeah, because um, it's the end of the week. You get some profit taking going on, but sometimes we give weeks, and I think especially today could be a tough one. from the standpoint of what happened yesterday. Market's still trying to feel its way through. We are seeing a nice little grind higher, and look at this, the market, how flat the market is on sentiment. Just no real clear direction right now. Market's pretty flat. We've gotten back to 94.50 area in the dollar index. So fundamental analysis. Well, I will. Yes, we do. Yep. You can. We look at the start of the week. We oftentimes will take a look at where the trading volumes have been. We look at some CME forecast or positions, should I say. So we'll take a look oftentimes over at the open interest and daily exchange volumes based on the currency futures market, and kind of get a filled direction of where leveraged money's at, and we'll kind of take a look at what asset managers, what they're looking at, what directions that they're trading into the marketplace. And then oftentimes we'll, I want to be cognizant of what economic alerts are going on, economic events, news items, that sort of thing. Okay. I don't spend a lot of time, though, breaking down the value of, some people put a number value on each different report. I'm more of the where I like to look at, okay, what's the expected number? What have we been doing? What's been the history? Has the history been inclining or declining on the numbers? And what's that little bit of sentiment in the marketplace? Other than that, I really kind of leave it to my charts, okay? But I've made it very clear to everyone in the room that fundamentals trump any technical analysis. So, correct, the COT report, yes. Yeah, exactly. That's what I'm talking about, the COT report. So at the start of the week, I'll take a quick rundown. I've done a complete training on the COT report from a weekly perspective, and then we break it down to the daily perspective, to where every day at the start of your day, if you want, you can go look at the daily volumes reported by, or yesterday. If you have the subscription to the CME, you can get it that day, or you can just look at yesterday. What did it close yesterday? What was the final numbers for yesterday? And how is that applicable to what we're looking at today? Would you short scalp the Aussie dollar and the Kiwi dollar? Yes, you can right now. If you're on that 5-minute chart, we are getting a, ooh, there we go. Wow. Yeah, we're getting a rundown here. Let's see what we can get here. They are, okay, now we're coming off. All right, here we go, guys. There's some potential shorts running on that Kiwi and on that Aussie. They've definitely dropped over. Some of y'all may already be in on this, but we definitely came over, worked through that divergence I talked about, and pushing lower here in the Aussie, pushing lower here on the Kiwi. We see these push going on in some of these other trades. The euro dollar coming down. Again, I'm holding a 14.27 in the euro dollar, but I'm holding a 13.27 as well. So I held on to that yesterday after the run up, added to my position, looking for the turn back to the downside. We got the topping pattern on the pound coming down back towards the open of the day. Let's see what type of continuation we're going to get. The pound Aussie, by the way, is pushing up. If anyone is interested in taking a look at that, it's had a break back to the upside. There's a potential scalp as it runs back towards the daily midpoint of the day. I'm taking a scalp on that at 1580 on the pound Aussie. Long. Had a buy stop triggered there. Kiwi, and the Kiwi here short. Looking at 64.16 short on that. So we get the follow through on that. Aussie. I'm watching to see what this Aussie is going to do. I'm looking for a potential break of 72.20. There it goes. 72.20 getting broken. See if we get some continuation down on that. Hey Rick, good call on that Cad earlier. That Cad's pushed up pretty hard, buddy. Nice call on that earlier. So Rick in the room called the Cad earlier. I'm just now updating what I'm going on here. Possible airhead on the EA, yes. Possible. You're right. Look at that Euro. Oh my gosh! Everybody's just decided. Okay, now it's time to leave, or time to take our profit. Here's the profit taking coming on, guys. Here we go. Look at that yen launch. Yahoo! 40 pips in that puppy. Rock and roll. Nice, nice. Okay, getting a little pullback now on some of these. The Aussie's now punched back up. I'm watching what he's going to do. If we get another little pullback up, we get an alligator mouth to the downside here. This is on the 5 minute. Let me drop down the 5 minute on the Kiwi as well. Let me get a little pullback up on it. We're going to be looking to see if we get another turn in the downside. Hey Burger, how you doing? You've done your goal for the week, eh? Good job. Nice. Well done. Also, keep your eye on the Aussie Yen. Even though with the yen pushing up, that Aussie Yen, if that Aussie drops, that Aussie Yen could roll back over. Look at that dollar coming on now. Coming on really strong. The Swissies pushed through the open of the day. These reversals are coming on strong here. They're harder to trade, but if you're looking for that reversal, we'll talk about that later in one of our trainings. Tammy's real good at it, eyeballing the reversals, but the yen was probably my best little setup that I saw to the upside. Pound yen is showing upside, guys. Pound yen is showing a potential upside move right now. Nice, Sonny. Nice. There's 40 pips for you. Nice job. Dollar straight coming on. It's still not enough just yet, but definitely coming on. Look at that euro slipping back over. Some more. Go down to that 5-minute on the CAD. CAD's got a nice push up here to it. I've taken some pips off my trade on that one. Okay, the pound yen, I mentioned that just a moment ago, guys. There's a potential here on that pound yen right here. It is a reversal pattern. I'll take it down to 5-minute. We've got a reversal type pattern, but there's a beautiful J-hook setup right there, guys. Now he's got to get above here. We've had, we've bottomed out here. We've moved up right across here, pushed up, pushed back down. This, whether you call this a cup pattern we had here or an inverse head and shoulders pattern, it's kind of, we got a rounded bottom, whatever you want to call it. We have a long bias potential. Oh, yeah. I see what you're talking about. Yep, I see it. Oh, on the Aussie dollar. I'm sorry, I'm looking at the wrong thing. Uh-huh. Yep. It's broken the 38.2, so I'm looking to see if it's going to push down to 50% on this guy. I'm going to retrace here. See if we get that follow through. Nice. Yeah, it did. It was up here. Yep, sure was. Nice. Well, you were up. You got that at the top there. Nice. Okay, guys, I'm out of that CAD position at with a plus 30. Averaged on that 33 pips on average. Covered my yen position, or that Swiss position earlier. But let me see here. And on my yen still looking good. Up 32 pips or so in the yen. Hidden divergence king. I know. Is that not hidden divergence setting up on an EA for continuation short? Okay, let me look at that, Mervin. Let me put up the TDI. Take a look. Okay, I don't see hidden divergence in there. I've got higher highs. Now let me look at the 15-minute here. I see regular divergence right there, and Tammy's probably all over that. Okay, I do see it right there. Okay, I do see what you're looking at. I see what you're looking at, Mervin. Now, yes, there's a potential here for that. Okay, now Tammy caught the hidden divergence. Probably the regular divergence right there, but hidden divergence can trump it. So here's the thought. Okay, Mervin, and for those of y'all who are normally in the room, here's something we look for. Okay, remember we talk about the rollover there and the alligator mouth. We talk about the pull back in to the long-term guppies. And then what's the next thing that happens after that? Okay, Tammy, I didn't see it. Okay. But remember we talked about this being the 1, the 2, the 3, and then the 4 process. Okay. So if this run into the long-term guppies hold, okay, and we test off of that with the hidden divergence showing, yes, Mervin, you got a setup there. You certainly do. Let's see if there's the follow-through on that. Now, in order for that to drop, 2 things are going to have to happen. Okay, we're going to have to see, you're going to have to see weakness in the Aussie for it to go down. I'm sorry. In order for this to go back down, we're going to have to see weakness in the euro. Okay, some weakness here. Goodness gracious, I can't write today. We're going to have to see weakness in the euro, okay, or strength in the Aussie to the downs in order to see that happen. Or one of them be, or this guy or the Aussie just be flat, nothing, and then weakness here, okay, in order to see that push down. Now, if this does pin back up, if he pins back up here, that runs back up and he hits the tops of these, hidden divergence is off the table now, okay? So, but good eye on that. Mark, you were asking about the pound yen. Okay, I'm looking for the pound yen to break on up here. You can put your stop. You're asking me the stop point up underneath, right up underneath the swing low. Either this swing low or that swing low. Okay, that's how I do it. I look at the previous swing low, and if this is the, that's right at a level, that's at the stop loss, the dot stop loss. Isn't that interesting, Mark? Again, here, I keep talking about how the dots levels, how the market came back near that level there. So I'm thinking, it depends on how far your distance is there. There's 25 pips. Is it worth it based upon how much you've got into the trade to possibly put it underneath this swing low? Okay. And it's completely up to you, where you're comfortable with. Some people in the room put the swing lows, like I do, beyond the swing low in this case, or the closer one. There's even, I don't know about that being a swing low right there, but maybe if you were down to 1 minute, that might show up. Yeah, that shows up as another swing low right there. But this would probably a more favorable swing low. Put your stop. Now, what I'm going to be looking at here is, look what we have here. Oh, look at Sonny's did anybody catch that alligator? I mean the arrowhead. Nice arrowhead there, Sonny. Now, for those of y'all who are typically in my room, if we're looking at this move here, and you look at the 1, 2, 3, 4 pattern, where are we at? What stage of this trade are we at right now, guys? What stage of this trade are we at? Yeah, there's been lots of them. You're right. Yeah, we're at stage 3. We're at stage 3 of the process. There was the alligator mouth right there, the arrowhead right there. Now testing into the retrace back to the long-term guppies. Now the bounce off the long-term guppies. Now a mark, if this guy makes a push on up, we've just set a new swing low. A swing low technically is a low followed by a lower low followed by a higher low. Isn't that what we have right here? Low, lower low, higher low. That suggests an upward move. Okay? Now, whether that's going to follow through or not, I don't know if this is, the swing low or not, but that's what we have. Okay? And for those of y'all who follow the 1, 2, 3, 4 step process, we're at step number 3, going into step number 4. It's like chapters of a book that happen over and over and over again when we have a nice setup like this. Or a happy, or we get a happy face. Yes, we get, yes. Hey, and I want to just say, I could not do this on my own without all the help from everybody that are members of the room. So again, I want to do a shout out to all of you, Sonny and Mike, Tammy, Janet, Rick, Gene, George. I mean, and many of you who have been helping out this morning. I can't do this all on my own, and I'm trying to trade, and I'm trying to call trades and watch different things going on and answer questions. So I just want to say thank you to all of those who are helping out today. Really do appreciate your help. It means a lot. Because of your short email video comments, I made 116 pips during the Euro session. Excellent. Christina, didn't they pull up based on the video that I sent out last night? They all did. The Aussie pushed right up to that level. The Kiwi pushed up. I talked about the risk on pairs, talked about the commodity pairs. They all went up to those levels. So good job. The target on the yen. Okay, I left on the 1 minute. Sorry about that, guys. The first target that I'm looking at here is, does it get back to the daily open? Okay. Now, the beautiful thing is about this, looking at what's the possible targets here, Charles, is now that I'm already into the trade, here's a potential target that, look what it pinned up to. It pinned up to that target. I was looking to see if it would hit the daily open. That's the white line right there, is the open of the day. So I'm looking to see if it'll push on up to the open of the day and then carry on up. Okay? That's what I'm looking for. So here's the beautiful thing about the dots here is, and using the bank trader strategy, is we can then start to identify levels. Now I'm also going to be looking for about 187.10 to 187.20 area is what I'm going to be looking for as well. Okay? 187.20 is going to put me back to the weekly mid-high. Here's the weekly open. So like to see it back up in this area. We still haven't reached our ADR for the day, but what's got to happen for this guy to go up is simply this. We're going to have strength in the pound and weakness in the yen. Or nothing in the pound and continued strong weakness, and continued weakness in the yen to the upside. Okay? Or if this goes flat, the yen goes flat, sets, doesn't anything, then we need to see some good strength. We need to see that yen, see the pound run back up. Okay? So that's why, and some of y'all have noticed already that in the room, I keep the major cross pairs on the right side of my chart. I keep the U.S. majors on the left side of the chart, except for the Kiwi yen. Okay. I thought about bringing the dollar index over here, but we've gotten really accustomed to where the dollar index and the centimeter lined up like so. Man, Just not seeing much here at all. So some of this stuff is just pushes for profit levels or pushes for other things. I'm not getting consistent sentiment in direction today. And right here we have the risk on. This is a risk on, risk off, and this the Kiwi Yen is also risk on, risk off. Now, I do not recommend anyone who's not comfortable doing it to look at these many charts. We have some folks in the room here like Tammy and Rick and a few others that are really focusing their attention on like one or two pairs of these 8 right over here, all the major crosses. When they have ranges that are like 270 or 330 pips, there's a lot of movement in these. So if you really focus your attention on every little setup in the Euro Aussie or every little setup in the Pound Yen, you're going to find yourself being able just to monitor monitor those pairs, like a couple of them, and get plenty of pips a day. Plenty of pips a day. That's fantastic, Christine. I'm happy for you. Great job. The Taminator t-shirt. Oh, by the way, if you're visiting today, we do have a guy in the room who's at late night. He's at the Improv. Okay, he's a stand-up comedian. He if you haven't figured out who that guy is, you will soon learn. I rarely stand. So. Charles, it's $97 a month. So there's the link right there, Dots Trade. If you click that link, it'll be sent over to a page that gives you really the breakdown of the room here and what we do every day. It's $97 a month, and it's just month to month. You can cancel when you want, but it's open 24 hours a day. We do live market analysis. I give you instant feedback. We moderate trade. We post trades. We look for Dots Guppy setups. We evaluate the setups. We execute trades live in the market. Plus, I'm going to teach you other ways of looking at the market. You probably picked up on some of that already today. So, but it's just $97 a month. So, you're welcome to join us. Today has not been the easiest of days, folks. Not the easiest of days, but we've pulled off some pips already this morning. Even if you have to get into some late trade. Okay, here's another potential setup in the yen, guys. See how the yen went right up to yesterday's low we talked about, pinned a little bit high. Oh, what did it hit? Look what it hit. For those of y'all who continue to question me about the dots levels, I'm telling you, I don't know. This algorithm works. Look what it pins up to. It pins right to the buy target number 2. Like it knew all along since this morning that was where it was supposed to go to. It comes back down to the buy target number 1 level. Okay? So we have another little setup here, guys. We have another little setup right there. I'll take it down to 1 minute. Maybe you can see it better there. Look at this little setup, guys. Hold on just a second. Okay, sorry about that, folks. Back in the saddle. I sit on the in my local community. I'm a board member of the Miracle League. And if you haven't heard about the Miracle League is designed to give um, kids with special needs and disabilities the opportunity to play sports. And I sit on the board, and I had a phone call I had to take, so I apologize about that. But the reason I took that phone call, it goes to a good cause to help these kids out, to provide fun activities, because every child, whether they're disabled or not, every child deserves the chance to play and to play sports and have a good time, have fun, be a child. So I took that phone call. It was important to me. So anyway, I'm just a regular guy like everybody else. You know, I've got feelings. I've got kids. I want the best for kids if I can help that. So anyway, we got a nice little move to the upside here, guys. And I just want everyone to know there's more to the world. And I'm hoping I'm not stepping on any toes, but there's more to this world than sitting here and grabbing a few pips. If you're making pips, you know, go help somebody. Either learn to do it or go help them where they're at in life. As I tell everyone in the room here, you know, no one sits on their deathbed wishing they'd spent more time getting more pips. People sit on their deathbed wishing they'd spent more time with family and friends and doing things that could have helped other people. And you know, things of the heart. So get your pips, and then go out there and make it a good day for somebody. Okay? So I'm going to help you get your pips, and I'm going to go help some kids. So that's what I'm going to do. So anyway, we got a nice little move up here, guys. Anybody jump on this? Anybody see this move? Nice little move. Now we're pushing away. Now, the question is, and this was a question that ran a long time with me, was what do we do when it goes beyond the buy target number 2? I'm going to take a moment and talk about this. What do we do here? You know, and that's a question a lot of people. Well, we do have the average. Oh, well, let me do it this way. What if we took everything that I had that I've got on here, like my ADR? I take my ADR away. I take away the bank trader strategy. I take that away. Delete that. Okay. Now the dots has the ADR built in. Say we go up there, we hit the ADR high for the day. Okay, that'd be a good target. But what if what's up above? There's the previous session high way up there. Is there anything else between here and there, if we're going to continue moving up, that I should be aware of? Okay, sorry about that, Rick. I don't know if, you know, is the sound breaking up? Sound okay? Okay. Is there anything else up here that I need to be aware of? That's where we come in and we start adding a few tools. For instance, I like to add on my average daily range calculator. Okay. And what this does for me, it sees levels, weekly levels that have been on my chart since the start of the week. It tells me where the market opened up at and where we're at in relationship to the cycle of the market on a weekly. See, if I could change this up a little bit, I'll show you here. I'll take this guy and I'll push it back. Let me go back. Let's say I go back, I don't know, 500 bars, let's say. I go back 500 bars. I'm going to shift this over 25, kind of get it out of the way of my dots. Okay. So here's my levels here. Now, if I go back, let's say on a 15-minute chart, and I squeeze this down. Whoops, squeeze it down, not open it up. I want you to notice something. Where's the open of the week? Open of the week, open of the week, open of the week. Okay, I guess I got to go to a 30-minute chart. 30-minute chart. Okay, there we go. We'll find the open of the week here. So open of the week sits somewhere. Come on, you. Open of the week sits right there. There we go. Boom, right there. Look what the market's done. The market literally, where it opened up, pushed up a little bit, fell down to a level, up to a level, down to a level, almost down to a level, back to a level. Okay. Not quite, you know, rambled around. There's something up here. It's running into some liquidity over here. And that's where the bank trader strategy comes in, because there's other levels here. Okay? But notice what the market's done. The market's traded to these, nearly to these weekly levels. This happens a lot. And if I can stand at the start of the week and my ADR paints out levels that I should expect. So when the market starts rolling down, where could it potentially be going to? It goes right down to the weekly mid-low target right here. And then what bounces back up, what it bounces back up, most likely it may go back up to the weekly open. So we have that tool. Okay, and then I add on the bank trader strategy tool where I can see day by day levels. Now this tool does go back, and I'm not going to do this to confuse anybody here, but you can go back in time and you can see all the levels going back. Okay, so we can see how the market went up to that level, came back off at the start of the week, and went down to the previous Friday's low, and then tested down to the LT1, LT2, down to LT3. Then we're back to the weekly open the following day. Look what it does. The following day, it drops all the way down to LT2 that you knew at the start of the day. Worked its way back up. Next day, we roll from the inside range high up to yesterday's high. Don't get much there. The following day, it tests the inside range low, pushes back up to the high target number 1, high target number 2 of the day, and that's where we're at. Okay. Then here comes FOMC, and we drop all the way down to LT1. Today we tested back up the daily midpoint, which you knew at the start of the day, and then dropped to yesterday's low, and then dropped all the way down, and look where it pinned at. Look where it pinned at. It pinned right at the LT3 level. Okay? So the question I'm trying to pose to you is, what if you know these levels in advance? What if you know what the bank traders are looking for as you trade? Might that help you out? Identify, because sometimes what happens is the market just goes out there and you're asking yourself, where's it going? It just went out there somewhere in space, and I don't know where it went and why it went out there. Okay, so let's say we were just looking at dots from the start of the day. Here are the dots levels from the start of the day, and the market just, like I said, just kind of went out there. So if you just left the Asian session, the open of the day, and you were just thinking, okay, the market broke this floor, where's it going? Well, it hit its ADR, but look what it did. It went to the sell target number 1, and look what it did again. Right to the sell target number 2 for the day, based on the start of the day. Went right to that, and how we bounced right back up to the open of the day. I'm telling you what, folks, I've been at trading for 20 years. I've developed all sorts of indicators and all sorts of strategies, and I've learned a lot, spent a lot of money. You probably have too. But not trying to pat myself on the back here, but this is probably, the dots method is probably the best thing I've ever made. It continues to perform. It's got a track record that's posted on our website going back to 2012. We're tracking it every day. We track what it does based on a certain trade protocol. And it performs and continues to perform, whether in times of uncertainty or times of trend or times of range. It just performs. And so there was an opportunity overnight to trade this back here, you know, and I'm going to show you techniques to where you might be sitting there going, well, but hold on a sec, Dean. It hit the sell entry and bounced right back up. This is a complete setup. This was a complete setup at the start of the day to trade from level to level to level. Okay? So anyway, let me get back. Look at this. Look at this. Look at this. Oh, that's sweet. Sweetness. Absolute sweetness. Nice push up. Let me look at some other ones here. Ernesto, thank you, sir. That's too kind of you. But some of you may or may not know, Ernesto and I been kind of knowing each other over the last, what, 5-6 years, Ernesto? We've traded together via Skype off and on. And I really appreciate you saying that. Thank you so much. And we've gone through some ups and downs together in the market. So anyway, it's been something else. When Nadex, I tried the Nadex thing, Thomas. I'll just be straight with you. I visited with the folks. I know the folks at Nadex. I know the guy who got Nadex started. I've sat down with him. I've been in his conference room. We've talked. I've tried to do the Nadex. It's just, for me, it's just I haven't gotten into it, or it hasn't been the, not to say the light bulb hasn't turned on, probably it hasn't, but I've been trading now for 20 years. I'm a registered broker. I'm a CTA. I'm a system developer. I know chart patterns. I see things in the charts all the time. And here's a different way of trading, and it's just not. It's just not getting me. It's just not clicking with me. I don't know how to put it any other way, but if it clicks for you, I just right now the volatility that we have and the uncertainty that we have and a lot of the up and the down, and they do have like the bull spreads and some other ways of trading it. It just hasn't clicked for me. I've tried it, just haven't seen the success that I've wanted to see out of it. I'm just giving you my personal experience. If it's working for you, by all means, but it's not something that I focus on here in the room. I can't do binaries. I'm in the U.S. I'm a U.S. regulated broker. We do not trade binaries or the offshore. If you're talking about the offshore binaries, I don't do those. But yes, I have traded the Nadex for a period of time and just didn't find as much success with it as I'm doing with what we're doing here in the room every day. That's just my 2 cents. So if you're doing well with it, keep at it. And I'm going to suggest that with anybody. If you have something that's working for you, keep going at it. But if you're still searching for something, okay, give me 30 days in a room. Let me show you what we do here, okay? And don't get it from me. Listen to calls that Rick puts out, or Mike puts out, or Janet puts out, or Tammy puts out. Take their calls. Don't take mine. Look at what other people in the room are doing. Okay, guys, we have a little bit of a double bottom scenario going here on the Kiwi, but it's rolled over. I want to talk about this here real quick here because there's a potential setup here that I see. We're getting a little back and forth here, a little double bottom going on here. He's come back over. We've got a retracement from the low of day. Here's the low of day to the high of the day, right there. We're seeing about the 38.2, kind of bouncing around it. A little pull up, but look what's going on here. We have a long-term rollover, a double bottom, potential push back up, test into this area, and let's see what happens here. I'm thinking if the rollover holds on this 5-minute, we'll have to see what the 15-minute's doing, but we could see a continuation down about, into this area, okay, into that area. Now, what am I, 15-minute? Let me look at the 15-minute. Okay, testing these lows, testing these lows. Let me look at the TDI, put the TDI on it. If you notice, I'm not looking at the MACD. I'm not looking at stochastic. I'm not looking at RSI. This is the only indicator other than what's on the chart that I look at. I don't look at anything else. This guy is telling me we are going down. Price may not be in agreement right now, but sentiment in the market is going down. Now, we could get a little pull up, for moving back to a 38.2 retrace. Standard profit taking level, probably got a little profit taking going on. Reset ourselves and then look for some continuation down. Okay? But based on what I see here, this is a downward play. Let me look at the 30-minute. 30-minute showing downward play. He's testing these. I'd like to see it below this area. The hour is dropping. We could see the hour continue to drop down to get back down to the market baseline, the yellow line right here. So I like what I see here. What's the 5-minute showing? 5-minute showing a little pullback, but the market baseline, the yellow line, which represents the overall direction of the market, it may come back. So this is probably some profit taking going on here, guys. Got a little bit of profit taking probably going on, and we'll see if it slips back over again. Okay. On the ECAD, let me take a look. I'm sorry, guys, I'm missing some trades here. Okay. Oh, yeah. Who called that? Tim. Oh, yes, brother. You got yourself something right there. Let's go take a quick look at what the CAD's doing. Okay. All right, so you look at the ECAD. See how this has a double top here? Euro coming down. If this rolls over and we got strength into the CAD, we can see some continuation down on that. Got a nice little setup. We just need to see if we get the follow through here. Okay. Okay. Charles, you can join the room. I make that available to everyone. If you want to, if you want to come in the room, see what we're doing, yes, you can do that. And then if you decide you want dots, but I will ask you to do one thing for me. And you're more than welcome to join the room and watch us for 30 days. That's great. I'm going to simply ask that while you're in the room, absorb as much as you can. See what we're doing. Okay. And when you look at dots, take a look at what was behind it, why I did it. Look at the results that are posted on the dots page, and get a sense of what it could potentially mean for your trading if you choose to use it. Okay. And by the way, for those of you who may be interested in dots, I do want to let you know that let me see here what's happening here. Go away, come back here. You let me with the dots purchase, you're also going to get the bank trader strategy. I'm going to make sure you get that. You're going to get the J-hook strategy. You're going to get the average daily range calculator. Okay. I'm going to provide you the master candle strategy. Okay, and the tools, the indicator tools that go along with these. Okay, so you're going to get these different components that we work with here in the room. You're going to get the Trader's Dynamic Index. You're going to get the average price bars. Okay, the average price bars are designed for you to see the undercurrent of the market. I mean, I've got some people that literally let's go take a look at the EuroCAD, for instance. Well, you can see it. You can see it here in the EuroCAD. If I just looked at if we just looked at the ADR, I'm sorry. If we just looked at some of the tools here, I'm sorry, taking some of the tools off, and I'm going to open this up. Okay. Well, here I could have just done it this way. Hold on, just a sec. I could have just simply done it this way. Let me see here. That's not what I want. Is this the one I want? No. Okay. Well, I'll just have to put it on a clean chart. But what I'm getting at is the undercurrent of the market. The bars are colored blue for long, red for short. So if you were looking at the market and you could just see the undercurrent of the market, let me put that in a different color. I'm not crazy about that orange. Orange is hard to see. So let me put this up in a yellow color. Thanks for posting that. But let me put it in a yellow or something, or that orange is kind of hard to see. So let me post that here, guys. There you go. There's the dots trade room and the dots itself. Thank you. So yeah, the EuroCAD, Timothy, is a potential trade. Yes. Now we'll need to see it come down and break this low point here to see continuation. Okay. You have a low, lower low. This is a higher low. It's set up to go. Okay. This is a nice setup. It pinned high. into the weekly low. Didn't quite get to the inside range low, but this is set up to potentially run south. Okay, good call on that. Let's see if we get the follow through on that. Now, in this case, folks, there's no guarantees here, but the idea is it goes back to, do we get a double bottom? Do we get an inverse head and shoulders look? Do we get something that would suggest a turnaround just yet? We have to identify the fact that this could come back, test the trend line. It broke this trend line. The trend line is just based on the average higher lows here, okay? What I'm looking at, though, is that those long-term guppies coming down, and the likelihood that the market can't turn against the long-term guppies, and they still have a good angle to the downside. I'm looking for continuation down. But it may come back and it may test this. And it, at this point, could say, not going to do it right now. But we have a setup. Hey, Lynn, good to see you. I haven't seen you in a while, buddy. Hope you're doing well. On the yen, I'm sorry, I didn't see your comment there earlier. Yep, I'm looking for the move to 120 again. Based on the comments I've read this morning from the regarding the BOJ's reactions. And you know, the interesting thing was I read a number of comments from Morgan Stanley, Bank of America Merrill Lynch, Societe Generale, and some others, BNP Paribas, and they were all talking about, okay, let the Fed do, and let's see this movement up, you know, this movement against the dollar, the sell-off on the dollar. But everybody I read, every single person I read, was still looking for long dollar after we get past this. So I think there could be some positioning going on where we're getting in at some really good long dollar scenarios. Okay, so let the euro run up to 1400 or possibly 1500. They're not looking at, they might buy the euro up for a little bit, but overall they're looking at adding to their adding to their dollar long positions. Watch the Kiwi and the Aussie, guys. Kiwi and Aussie showing downward action. Look at that Euro Kiwi. The Euro Kiwi has not come off of red in the sentiment meter. And look at that Euro Kiwi roll off, roll back down. That's the beauty of the sentiment meter. You'll also get that tool. You'll also get the dollar index tool when you purchase the DOTS method. I provide you all my tools. It's like a suite of tools that you get. But you see that this Euro Kiwi stayed red in the sentiment meter majority of the morning. Even though it was pulling back, and I told y'all earlier that when this is red and this is pulling back, there's probably profit taking. And what did it do? Went right into the long-term guppies and now pushing back away. And we're also seeing now the test of the trend line in the Euro Cad. It's coming back and testing. Let's see if we get a follow-through. We don't have sentiment in it right now. Cad still fairly strong, or it was. It's kind of blipping back and forth. Now we're getting some more weakness coming in. It's pushing back up. We'll see what it's going to do here. So if the profit taking is still running, wow, look at that thing run. And the euro, if the euro doesn't push down lower, Timothy, because I know you're looking at this trade right here, if this guy doesn't push, like I said, if he sits, if the euro dollar sits still, doesn't move, this guy doesn't move, and the dollar CAD, you know, get weakness in the CAD. Okay, the CAD's sitting neutral right now. We need to see either weakness in the euro or strengthen the CAD, which would be the dollar CAD coming down. By the way, guys, when the I took a short earlier on the pound on a little pullback here that we had on that 5-minute. I don't know if I posted or mentioned it or what, but we were talking about the pound, and I mentioned to you guys watch for the possible push down and a bounce off the open. Look at what we had. Look at that little pullback right there. Same thing on that we're looking on the EuroCAD. Look at this little pullback. And then what does it do? Follows the long-term guppies down. Sorry, I'm trying to answer questions and trade and post and all the others. Up, not long. I'm short. Wrote the wrong thing there. I don't know if I posted that or not, but doesn't look like it did. So I'm short at 156.03 short. If you missed that, I apologize. Don't beat me up because I forgot to post it or whatever. But I did mention, guys, that I was looking for this. We had a double top here, declining double top. I mentioned look for the possible move down to the open and a bounce. We got the bounce and then the push away. Sometimes what I'll do is I'll just set orders as I'm going in and answering other questions. I'll set orders, like in this case, I was looking for a push back up and then a sell limit. So we pushed below, got down here about 55.88, 55.90 area. I was looking for a push back to around that 56.05 area. What's this guy? 56.01. So I wanted to see, really, I was looking at, yeah, it's about 56.05 area, and I got filled at 56.03. And look what the, by the way, check this out. For those of you who don't know, the average price bars, do you see these here with blue bodies? Blue body, and red wicks. Red wicks means that we're in a downtrend. Blue body lets you know that we're in a reversal phase. We see it though. We see it already happening, but just the candles themselves are you can actually read the market from what the candles are doing. Then when we get to blue body with gray bars, we're into a phase of congestion, consolidation, possible turn. And what do we get? A turn. And what does it do? It follows our format. Actually, there's two things right there. The pullback into the long-term guppies. We don't test the long-term guppies, but we do turn in. I thought we might see it up here, but it was showing these reversal candles, and then when it went congestion candle here, I'm like, okay, fine, just put the order, and then we get the nice little drop down. And let me see here. Right to a target, guys. Right to a target. Right to a target. So I'm going to see if we get it, if it'll push on down back towards the daily, down into this area. I'm looking right in here for a potential move down. I'm looking somewhere right in front of 55.50, about 55.55. If we get a move down, I've got 1, 2, 3, 4. Well, that's an inside candle. 1, 2. That's an inside candle. 1, 2, 3, 4. That's an inside candle. We should get 1, 2, 3. 1, 2. This is a 5-minute. 1, 2, 3, 4, 5, 6, 7. Is that what we got right there? We got inside candle, unless this makes a lower low. We've got probably another 2 to 3 candles down before we get a pullback like this. Okay, one of the things, I tell you what, I'm going to give you something right here now. If you're a guest in the room, okay, you can go over to the CompsFX website. I've got a video library of nearly 500 videos that I've done over the last number of years. A lot of good stuff in there, but let me give you one thing that I can't emphasize this enough in your trading. Count the candles. Count the candles. when you go into a trade, you want to be in the first, second, or third candle. If you're a momentum trader, okay? If you're a momentum, you're trying to catch that move. You want to be in the first, second, or third candle of a move. Notice how when I look for a pullback here, and when you join the room, we'll walk you through the process of what to look for. Okay, but I'm getting in, maybe not on the first, well, I'm already in because he did pull back to a sell limit. But let's say you hadn't gotten in, you're looking for the break. Well, the break comes in the first candle down, comes back and test. So let's say you're in the second candle, somewhere in here. But now what you're looking for is you've gotten in an appropriate area. Now you start to count how far could this potentially go. And rule of thumb is that the market will move 5 to 8 candles in a direction, 5 to 8, then look for a pullback. 5 to 8, look for a pullback. It might go 13 candles, then a pullback. The longest stretch I see, on average, the longest stretch I see is something near 20-21 candles. Now, what is 3, 5, 8, 13, and 20, or 21, what do they have in common? 3, 5, 8, 13, and 21. What is that? Thank you, Devorah. That was kind of you to say. I appreciate it. Those are fibs. Okay? So I can go to a 15-minute chart here. Okay? Now, we'll go 1, 2, 3, 4, 5 candles down. Okay, I'll fatten up my candles so you can see them better. This is the average price bars. Part of one of the tools that you'll get when you get dots. I'll make it available for folks. Okay? Okay? I'll fatten them up a little bit so you can see it. So we've got 1, 2, 3, 4, 5. 6 candles of pullback. Okay? We pull back and we close, we open up a little bit and then down. Okay? So now we're into our 1, 2, 3 down. Didn't I say we have 2, 3 more candles or whatever? Now that was on the 5-minute, and I realized one more board down would be 3 candles to the downside. But on the 15-minute here, we're due for another couple of candles to the downside before the next pullback. That could take us on down into this area. Why does the pullback happen? Natural thing called profit taking. Okay. Now, one thing of note with this that I want you to see that you may not see right now is we do have a double top. A double top has a floor that it starts from. We have reached almost to that floor. Right down in this area is the floor. Right down in here, right in this area is the floor. And we reached that. Now, what I'm looking for is, are we going to push lower? Okay? So, are we going to push lower? Now, some would say, well, wait a sec, that was the actual first candle up. It doesn't matter to me. It's somewhere in this area. Okay, somewhere in this area is the floor. Whether you call it that first up candle or the bottom of this candle, somewhere in this area is the floor of that double top. Now, step out just a wee little bit. What is about to happen in the market with this pair? What setup is coming? For those of you who are short the pound with me right now, what's coming? What's about to happen? Why a bounce? What pattern do you see? Ah, there you go, Charles. Excellent. 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 Okay? We could get a head and shoulders bounce here. Okay? So what I'm going to do right now, folks, is I'm in this trade. Okay? Like I said, I was at 56.03. Okay? So I'm going to close half my position because I think we could get a bounce. I'm going to close half my position. I'm just showing you what I do. Okay? When I trade. Okay? So in the room here. And then what I typically do is I go to a break-even +2 or more, okay? But usually I go to about a break-even +2, which would put me about 56.01. Because what I'm thinking is this. I'm thinking that we could see the possibility that this would push back up somewhere in this area, give me a lower shoulder and then a move on down. If this is a head and shoulders pattern, okay, we've got a double knotted head. The market's coming down, so we have this look. Here's what we're looking at. Up, down. We get this head right here. You see his smile? He's smiling at you right there. Just kidding. I just want to throw that in. Okay. And so we come down, and we bounce back up, and now we're down. Okay. Now what we're going to be looking for is a neckline. The neckline is usually what we prefer to see. Well, some people talk about a straight neckline across. The neckline is the low point to the low point. Preferably, we'd want a downward angled neckline. Okay? Now, so if we have a flat neckline, that's why I'm looking for this to come right down in here, because this is my low point. This is my low point of the head and shoulders. Okay? So if it'll come down here, and then we get a bounce back up. Now, if we get this bounce back up, I'm thinking the bounce is, there's a high right there. So I'm thinking, okay, possible right here, and then we have a high way up here. Well, if it's going to be a lower shoulder, they're not going to take this guy out. If it's a true reversal setup, back down, they're not going to take that guy out. Maybe they might pin it, but they're not going to close above it. So somewhere in this area right here, I'm thinking we could get a pullback. Okay? We could get a pullback into that area. Okay? Now, if he doesn't take this out, that little high right there, if he doesn't take that out, guess what? I'm probably going to be A-okay. I'm going to give it room to run. Or I can just say, hey, he hit the bottom down here. Like if he runs down here into that area and he actually comes down in this area, I may just go ahead and pull off the trade, take my pips, turn it, run it back up on the 5-minute chart or 1-minute chart, collect on the upside, and then be prepared to trade it back to the downside. I can see a pattern development before it gets here. Okay? And I'm going to start training you how to see that. I want you to be able to look at a chart and go like, there's a head and shoulders potential development. Now, right now, it's showing an upward trend line. Not the best head and shoulders pattern. So that's why I'm saying we need to see another bar down, and this neckline needs to be either flat or it needs to be down. I would like to see, never see head and shoulders. I'm not sure what you mean by that, Ricardo. I would like to see, never see. Head and shoulders, by the way, is one of the most frequently watched patterns in algorithms because of its consistency. It's a head and shoulders is a short bias, and it I never found that pattern in charts. Oh my goodness, it's here all the time. It's in all the time in the charts. You'll find them. So in different forms. I mean, here we have inverse head and shoulders, inverse head and shoulders, inverse head and shoulders type setups. They're hard to see sometimes, but anyway, that's just one setup that I look for. Okay, how are the other things going on right now that I took, I take 5-10 minutes off on that. What's that EuroCAD doing? EuroCAD still, now this is the case where he's walking the trend line up, but he hasn't really broken above. He's running into these long-term guppies. Long-term guppies are kind of getting a little flat. CAD's sitting flat. We need to see that Euro push down lower. I tell you what, I've got some training on chart patterns, but there's all sorts of websites you can go. There's chartpatterns.com. I think that's it. Ran by Thomas Bulkowski. It's a great website. But if anyone listening to me right now, if you really want to learn chart patterns, I'm serious about this. There is a book. If you want, I love chart patterns. Why? Because they repeat themselves with consistency. And there's about 10 chart patterns in the Forex that have high amount of consistency. Head and Shoulders is one of them. But chart patterns complete 65 to about 85% of the time. They complete themselves. Okay, the better ones do. Okay, if you have something that you recognize that completes, that finishes, that goes to a certain place 65 to 85% of the time, you're ahead of the game. All you got to do is now enter at the right places and provide the proper money management to the trade. So that's why I like to look for chart patterns. Oh, a book. Oh, I'm sorry. There's something that I was going to say. There's a very, very important, I kind of blanked out there for a sec. There's a book out there by a guy by the name of Suri Dudela. S-U-R-I Dudela. D-U-D-E Dudela. D-U-D-D-L-E-L-L-A, I think it is. Suri Dudela. He wrote a book called Trade Chart Patterns Like a Pro. It is a must-have book in your top 10 books of trading if you want to learn chart patterns, if you want to trade chart patterns. For me, it's in my top 10 list. Just like Mark Douglas's Trade in the Zone and Disciplined Trader. Those need to be in your top 10 list. Unfortunately, we lost Mark this past weekend. Passed away suddenly. So, but a good guy. Had the opportunity to meet him once. We spoke at a conference together. Nice guy. Great. His Trade in the Zone is a great book. By the way, guys, we're getting a little push down in the Cad Yen right now. Yen's coming back over. Cad's trying to push up a little bit. You see the relationship, what's going on here? In order for the Cad Yen to go to the downside like this, okay, we need to see strength in the Yen and weakness in the Cad, and that's what we're getting. With the dollar Cad rising and the dollar Yen going down, that makes sense. It's just following what's going on with the majors. Yeah, there you go. Thank you, sir. He. Look at that, Ricardo. Yes! My Euro Yen, baby! Come on. Get on down there. I'm aiming for 136, guys. That's on my target. 136. Right down. I've mentioned, guys, this is where I'm looking at, because this is where the bids are sitting at right now. Bids are sitting down here, and I don't know why it won't get down there. Maybe there's some bids ahead of it. Maybe if it breaks through there, they know it's going to. There's nothing. If maybe there's bids ahead of this. Bids are buy orders below the market to buy the market back up. So the thought is there's probably bids right here, because there's maybe right below here some heavy-duty sell stops to run that puppy all the way back down into this area. Because it is just doink, doink, and get these reversal bars, and it's just not a pretty picture here, but I like the long-term guppies are holding in. We just got to work through all the short-term traders in here. Got to work through all maybe some institutional bids in this area to hold it up. Oh, this is a good example. Let me show you this, guys. Here's something here. I don't know if you see this too well or not, but if you take, well, this spiked up, came back down, and back up in that area. This is not the prettiest picture, okay? But you have a shoulder. You have a double knotted head. See how it comes down to a low point? Comes up, comes down to that same low point, so we have a neckline. Now, I talked about looking for a lower shoulder, right, a moment ago. Here's a lower shoulder, but look what the market did. The market does this. Here's another tidbit for you. You need to know this if you're an active trader. Very, very, very important. Have you ever been in a situation where you knew the market was going to go a direction? You just knew it. It's going to go this way. But the market shoots up real quick stops you out, turns like it knew right where your stop was, turns and goes the other way. That is a play they do all the time. It's purposely done. Okay? And it's called a stop hunt. And I know you might, I've heard people talk about stop hunts. It's much a bull. It's not. Okay? It's not. When an institution, sizable institution, see that there's 200 million sitting, or 400 million, or 500 million, or $1 billion worth of contracts sitting at a stop loss level, you cannot tell me they're going to go, nah, that's all right. We don't want that money. That's fine. We want the market to go this way. The easy money, folks, the easy money for institutional traders is stop loss orders. That's easy. It's a given. Okay? So look what the market does. It pins high. Where to? Right back at the open of the day. Stops out any traders who are looking, if you haven't gotten, look at this. They took it all the way back up to where people saw this rollover and a break of the floor. Right here. See how it came down and broke the floor right there? That little low point right there? Broke the floor. So let's say you got some folks in here, somewhere in here, they just got in short, going down. And they're going down, and now it starts coming back on them. Maybe they're waiting. Maybe they're adding to positions, whatever. But they drive it all the way back above where stop loss orders are sitting here. Now, where those stop losses are sitting at, you also have, who can tell me what's also up here? What's also up here? What's up here, guys? Somebody tell me. What's above the market? Offers, 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 sell orders. The market's already shifted lower. Why would there be buy orders? In order to be buy orders, we got to take this guy out. Then, in order to come up here, okay? There's not, no. There might be some buy stops. Okay, granted, yes, there might be some buy stops, but the market's already proved its bias down. It's already proved its bias down. They already know with this pattern that will most likely head lower, because what is this? What we have right here is this part of the head and shoulders. We've gone up, we've made the neckline, we've come up, double knotted head, and we've done this. What's the next thing that's supposed to happen? The next thing that's supposed to happen is a lower shoulder and then down. That's what the market's looking for. They're looking for this part. But what do? They pin it high, just high enough to take everybody out who didn't already get out, or adding to positions down. On top of that, they got their buddies sitting up here who want a better price. And you'll see this thing happen. And ask people in the room, if I've not mentioned this to us, or to them time and time again, be careful of the market playing these games on us. Okay? So if you get stopped down on something like that, understand the game that's going on. And look what it does. It comes right back down and closes. Down in here. We work back up, and now we're back to normal. So they collected stop losses, gave other institutional traders a better price near the open, or they themselves, collecting the stops, put on then a sell order up in this area. Okay. Now that was a stop loss, but that's a stop loss, but SL is also a sell limit. Offer is also a sell limit. And then we drop back down. Okay? We make a lower shoulder right here than we had over here. The market breaks the neckline and we push on down. Now, what's the distance I need to look for the move down? The distance I need to be looking for, I'm going to kind of do it from here to here. Okay, that's just about to the neckline. I'll call that the neckline right there. And this low point, I don't go all the way to the top of the head. This is a more higher probable target here, that little floor right there. And what do? I just simply take that and I look for the potential distance that the market should go on the break. And look where that's at, guys. It's right in the yellow area, right back to area of liquidity that I mentioned to y'all that we got to get through over here. It's a measured move. It's not the best kept secret in the market, but is the secret of chart patterns, is if you know what this is. And better yet, if you take this guy, if you take him, and you make him a 2/3 move, make it about 2/3 move, much higher probability, and look where the market's sitting at. The market's sitting at a 2/3 measure move. I hope I'm sharing with y'all for this, this free day in the room. I want you to say, hey, I went into that room. I'm not going to do dots. I'm not going to do the dots trade room. But you know what? The guy did give me some stuff to think about. Okay? I don't want anybody leaving out of here without getting something out of the day. Okay? You spent time with me, and I appreciate it. I want to give a little something back to you. I've talked about counting candles. I've talked about chart patterns. I've given you a top 10 list book you should have on your in your list of books for trading. I've given you little techniques here to look for. Okay? Start applying these things. So I don't care. It doesn't matter to me if you stay with if you join the room or you don't. It really doesn't matter to me. Frankly, if you're just here to get signals, to have someone tell you what to do, you don't need to be here. I'm looking for people who want to learn to trade for themselves so they don't have to be here. They don't have to listen to any guru out there. They know what they're looking at. And fortunately, I've been blessed with some great people in the room who've decided to stay in the room because it's just become a great community. And people are helping each other out, find pips. I mean, the other day, a new member of the room called to trade, and we weren't looking at it. We went over, took a look, boom, 20, 25 pips on the trade. It was good stuff. So yes, I'm looking for that to continue on down to 136. Sorry, got into a long spill on that, but we're into the training phase of the day, and so I'm giving you a little bit of training stuff. That Euro Cad, Tim, just continues to ride along here, but this is good sign. This means that the sell limits are holding, and maybe they're rinsing out the buy limits. Maybe they don't have enough sell contracts just yet to fall back to the floor, but this is a good sign of a potential drop here. Now the key will be, Timothy, is it needs to break below here. It needs to break below this guy. That's going to be key. If the market drops back down another time and doesn't take him out, it's over with. You with me? He's got to break below that. Okay, Mark. The last 15 minutes on the yen here. We got the pin low. Didn't take out that swing low right there. What we have going on the pound yen, Mark, was what's going on in the Cad Yen too. We had the yen pull back. We had the yen pull back. Now we're going to look here. Oh, look at that euro getting weak. That euro should be busting lower. That guy should be busting lower. Look at this. They're holding it, holding it, holding it, holding it, holding it. They're holding it. Look at this thing. The sentiment is red. The dollar is climbing in strength. We're back up to 94.75. We're back above the FOMC statement. And this thing ain't budging. Somebody's holding it right there. They're holding it. No one's going to look, and it's going to fall. So back to the yen here. I think what we had, Mark, was the fact that the yen came back. The dollar yen was coming back. Maybe for some profit taking. Maybe that might have been it. Part of it could be, are we going to establish a floor to work off of? And the key will be this guy has to get above the open of the day. He pinned above it, but he's got to get above it, hold it, and then push off. He's doing it right now with the yes. This is a good sign. This is a good sign right here, Mark. He comes down and says, okay, are you really the floor I can, can you be a floor that I can work off of? Yep. This tells me that the bids in here, there are bids here holding this guy. Now we're going to have to fight through some sell limits up here, some offers, and then we'll push on through. Okay? And we got, this is higher here. That's a good sign. I'll put on the TDI and we'll look to see if we, what do we see here? Do you see the hidden divergence? Do you see the hidden divergence? Hidden divergence is continuation. We got hidden divergence right there. Hey, Ricardo, let me look. Is that signaling an up right now? No. 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 You have a bearish flag pattern right here, or bearish pennant pattern rather. Okay. Let me share something with you, Ricardo. Even if you don't see I just want to show you something. What we have here, this pattern, downward pattern. You can see the downward trend, higher lows, lower lows, or lower highs. Excuse me, lower highs. This is what's referred to as a bearish pennant pattern. Okay. So what are we going to look for in this trade? What I'm going to look for, make it real simple here, is I'm going to be looking for from that high point to that low point, what that distance is on a break. What that distance is on a break. So whenever the market decides to break down here on the break there, that's where I'm going to be. That's a distance that I can be looking for the market to get to. Okay. Now then, does that match up with any areas of liquidity? Okay. Oh, by the way, lower highs, higher highs, hidden divergence right there, guys. Hidden divergence means continuation. Okay. Now then, our liquidity is not until down here. What I mean by that is where orders are most likely sitting at. Look at previous price. Most likely the orders are sitting down here. They could be ahead of it. Now another thing we can do here is think that, okay, look at this move up. Whatever you want to call this move, the floor is right here. So we probably have bids at the floor. We have a distance that we've measured that we could potentially move to beyond this, okay? And we have a daily midpoint that has a high probable point of hitting on a break. So I would say here right now, based on this 5-minute chart, you've got about another 12 pips or so at least in this guy before getting down into this area. And if I step out, take a little bit bigger look at this, let's see where we're at in the whole scheme of things from the low of day to high of day. Where are we at? Well, we're sitting right at 50%. Now, what happens at a 50% level? A good buddy of mine, Hubert Sinters, talks about right here, you have what's called the ambush trade. Traders are lying in wait to push it back up. That's what systems do. That's what some systems are developed to. And you got a 1, 2, 3 potential back to the upside. Okay. Where's the 618? Right at the DM, the daily midpoint. So let's see if it drops on down to here. That'd be a 618. Let's see if this gives. But right now, look at this guy. Look at this. Now, we could be in for some profit taking here, but I'm not seeing it in price action. So what I need to see here, Ricardo, is I need to see this guy come down and make a low. This guy needs to make some lower lows here. It looks like he is. Okay. He's down to that low now. That's a good sign. Okay. That's a good sign. And we'll look for it to slip lower. Okay. Now, understand there are some institutions out there that are looking to buy the dips. They're looking for the Aussie to go up higher. Okay. So this looks like continuation down potential, but it's just finding where those big orders to drive it back up or to try it. Okay. Okay. I'm looking also for that Kiwi to drop, guys. See, it's pinned back up. I'm looking for that drop back down again. And when I look at the TDI, it's had a very strong push back up. We're looking to see if we get another little slip down on it. We'll see what it does. We're coming into on a Friday. We're 6 minutes away from noon, New York. It's going to be slowing down. Guys are getting ready to go to lunch, or they're already off to lunch. So, there he goes. Didn't I tell y'all? Didn't I tell you? The sentiment meter was my clue. We talked about the setup, but when that centimeter, that was a 1 something, and this is red. Look at that Kiwi Euro, or the Euro Kiwi. Look at the Euro Yen. He. Euro Aussie slipping back over. Oh, by the way, guys, I don't have. You might hear in the background. I got a little soft music playing. I don't have CNBC up. I'm not listening to Bloomberg. I don't have any of that stuff going on. I've turned it all off. I've turned off all the news. I'm taking my clues from the charts and the charts only. Now, I'm aware of a news event coming up. I'll clue in on a news event there. I've got some feeds that give me updates, like a Reuters feed and that sort of thing, to give me updates. But I'm making my trades based on what I see on the charts, okay, and what the probability is in the charts. So, again, guys, I was looking for that Euro Yen to go down to 136. I've been short that. That's me target for the day. Look at that Euro busting lower, baby. Yes, I like some of that Euro short. So there's that Euro trade I was talking about, and I'm just looking for a pop to 36, and I'll be a happy camper. Look where he's getting into. Now, what I've got to watch here on this is that we talked about it getting down there, and if the liquidity is going to come in and snake bite me here, or not snake bite me, but try to push back up. I could hang in here lower. I'm going to I've told myself 36. I'm going to stay with 36. I just want to see it kind of pop it. It could go lower, but I wanted to see it pop 36, just to touch it. Well, it's got to get down below it for me to come out at the ask price. So, Timothy, we got to see if that Euro Cad. Look at that Euro Cad keeps on climbing up, climbing up, climbing up. Your stop should be above the pin high here. Now, if you want to, you can put your stop above the above here. Oh, but that CAD, wow, look at that CAD. Oh my goodness. Look at that CAD run. I'm sorry, guys. I took my eyes off of that. Wow. Wow, wow, wow. Oh my goodness. Wow. I got some of that, but oh my gosh, look at the move on that. Crude's down $1.50, down 3.2% on the day. I hope some of y'all saw this. I apologize. I'm all over the place, I know, but I did not even see that. I try to, Andy. Sometimes I'm not able to. Sometimes I let them run. But yeah, I try to get myself flat before the weekend. Come on, Euro Yen. Be impatient. Be impatient. Wow, that CAD just rocked. That's why that CAD's pushing up here. That Euro CAD won't go over because that CAD. It's running in. Now, here's another thing too, guys. There's a disconnect. The Aussie should be falling right now with that CAD running up, but there's a disconnect. The CAD's running solo right now, and it could be because the BOC could be doing a bond auction. Sometimes we'll see this type of movement. It could be just based on crude. I'm checking to see if there's anything here. By the way, since we've had the European close, London's going to come into its close. Right now, the FTSE's down 1.75. I'm sorry, 1.34% on the day, 1 1/3. That's the FTSE. The DAX is down 3% on the day. Wow, and the CAC is down 2.5% on the day. We should see, yeah, the German 10-year bond slid some. It slid 12 basis points today. U.S. 10-year only slid about 3 basis points. The bonds. We should see this euro slip lower, but I think what's going on here is that CAD, what the CAD's doing here. So, Elliot, yeah, or Hans, yes, there's that potential for that move back over. Don't see it right now, but I did not see that happen. Oh, absolutely, Lynn. Yeah. Patrick, you can go to our website, Patrick. There's a basic model of the TDI that you can get off of our website. So if you're looking for the TDI, or the Traders Dynamic Index, go to www.compassfx.com/synergy. And you can sign up for the Synergy model. It was another model that I developed a number of years ago, and you can get the Traders Dynamic Index right there. Pound dollar coming back up. Yeah, guys, I was hoping it was going to push lower. So I'm going to, I was holding on to this. I was really looking to see if it was going to push lower and hit that daily midpoint. Sitting down there, it's coming into some liquidity there. I was really looking for the 55 point on this guy. So there's the trade there that I'm holding on to. I'm going to take another partial here for 25 pips on it. See if I get a little bit of a bounce up, and if it holds it, maybe add back to my position at a better price and see if it makes another push back down. You're welcome, David. I hope you were able to get a few pips this morning. I have something I said or somebody else made a comment on that you were able to follow what we did. You're welcome. With this CAD going up, I thought we might see the yen go up as well, but not seeing that right now. That's okay, because that wouldn't, my euro yen trade is really hoping it's going to hit.
Hey, Dean, can you hear me?
I was within about 4 or 5 pips, 6 pips of it hitting the 136. So I'm looking to see what the pullback's going to be here and see if we get another push back down.
Hello, Dean. Hey, Dean, I just wanted to comment on Len's line there about the EU not being happy with the Fed. There's not very many people happy with the Fed this morning, as you can see by the Dow and the S&P. Pretty much Yellen is running the Fed with a finger up in the air to find out which way the wind is blowing. They really have boxed themselves into a bad place, and they're in a no-win situation right now. The best thing they could have done yesterday was raise it a quarter and just let it sit there. But what they've done, and unfortunately what they've done, is they've inserted more uncertainty into markets worldwide, and nobody knows what's going to happen next. That's what everything's running on right now. That's why the VIX is so high. That's why we're having so many problems like we are. But that being said, unfortunately, the Fed is not completely to blame. There's a lot of terrible policy that's been made in Washington, D.C. that's also affecting what's going on in our national economy. And as a side effect, that has a terrible account around the world as well. So the Fed really can only do so much. As I said before, they had the chance to raise rates back in 2013 when there was a little bit of a pulse in the economy in the U.S., and they neglected to do so. And if they had done that, they wouldn't be in the position they're in right now. We're slowly but surely heading toward a worldwide recession, and the Fed has absolutely no way to fight it. So that's it for the political soapbox. For all the new folks in here that are taking a look at the room, I'd just like to relate to you. I'm sure that many of you have, like myself, spent untold thousands of dollars on different systems and gurus that were going to make us rich. If you take a month to take a look at this room, I assure you that you will learn something new every day. If you're looking for that place that will explain to you what this market is about and how to make money in it, you have found the place. With my experience, I've been through so many other rooms and so many other teachers that have always left out a piece here or a piece there. That doesn't happen here. The blanks are filled in, and that's what I like most about being in this room. And it's a situation where if Dean's not around, somebody else can answer your question, or you can easily email Dean, and somebody will get back with you and let you know, just to let you know the Euro CAD's moving higher right now. But if you are looking for the place that's going to fill in the blanks, you have found that place. And for the amount of money that you spend here, like Gene said earlier, somebody asked if you can make up the money in a week. Like Gene said, in some situations you can make it up in a day, depending on how you trade. But that being said, there are many different methods of trading that are available in this room. You simply have to find the one that works best for you. And like Dean said earlier, if you're looking for somebody that's just going to call trades, you're in the wrong place. What people are here to do is they're here to learn how to trade so that they could go out on their own anywhere, not need this room if they choose not to need it, and go ahead and make money on their own. So that's about all I had to say. Everybody have a nice weekend.
Hey, thanks, Mike. Appreciate your commentary. And you do shed a little bit more light from that political standpoint. I agree with you. There was a moment, and we had a couple of them, the 2013 moment, and then this past year where we saw some strength in the dollar and things were turning. They could have done something. Having not done something, we've gotten continually lower numbers. If they had done something, things were setting up. The market itself was turning. Things were turning. Had they stepped in and go, "Yep, we agree. It's time to we wouldn't have some of the numbers we've been getting, some of the poor numbers we've been getting. So anyway, hey Tammy, are you here, or Janet, or Jean? Anybody want to, for the folks here that are visiting, anything that you might want to mention, your thoughts or comments? You're open to mention something as well. Take care, Sonny. Have yourself a great weekend. Hope you had a good vacation.
Dean, can I just make a comment?
Yeah, go for it. Sure.
Okay. What I'd like, when I was learning, I've been trading now for about 6 years, 7 years, and I started with Dean, back in what, 06, 07, and I knew nothing about trading. And what I did is I traded one pair, the euro dollar, for 1 year to learn how to trade. And I think if the new people tried one pair, pick a pair that you like, and trade it and learn the system. Bouncing back and forth will confuse you and you'll lose your focus. And I now make anywhere from 500 to 600 pips a day, and I trade for a living. And I just wanted to say, but if you come into this room, you will learn. There's a lot of people here that will help you and answer your questions. So we welcome you to the room. Look forward to seeing you.
Go get some fish there, Ernesto. Just saw you heading to the coast. Thank you, Gene. Appreciate the good comments, man. Really do appreciate it. And Gene is in Brisbane, Australia, and I mean it's like 2 in the morning for him right now. But a great guy, willing to help people out. Mentions trades in the rooms, mentions setups. We've even taken one of the tools here in the room, the bank trader strategy, and he's ran with it. He's become a master of it. He sees setups, and we've done a training in the room, and we've done multiple trainings. But he walks you through some processes. So, and there are going to be times where it's just not me, folks, and that's the deal. This room is not just me. It's a community of traders. And so, if Mike or Gene or Tamara or somebody wants to get on the mic that has been, they're experienced, they know what they're looking for, they've shown success, I want them to be able to share with you what they're doing, because they might say it or show it a way that connects with you. I may be saying the exact same thing, but I'm not saying it the right way. I may not be showing it the right way, and it's not connecting. But like the other day, someone made a comment about, I'm not seeing something, Dean, about, I forget if it was on the TDI or what it was, and then Tammy came on the mic and talked about it for a moment, and I got this email from this person like, thank you so much for having Tammy come on the mic, because when Tammy came on the mic, she made a comment about this, and click, the light bulb went on. Now I understand what you've been saying, Dean. So I encourage you, if you have questions and you're a member of the room, send them in. And if I can't answer it in a way, we'll get someone else on the mic to help you out. So we got the euro pushing back up, guys. Probably some profit taking for that move down coming. So we got that move going on. To the upside, we've seen the Euro Aussie push back up again. We've seen Euro Cad definitely on the push back up. So that trade, we needed to see that roll back over, and it didn't roll back over. So and that's the thing about sometimes you have to wait. You see the move, and you want to see, do we get the follow through? Okay, so if you took that trade, you could have had a stop right above and just take the stop, or if you had it right here or not. But obviously with the CAD, I didn't see the CAD getting weaker, and the euro now getting stronger. We got this big push up going on. Now, where are we at in this? Now, we could look at, I don't know if that's the high of the day, but anyway, from that extreme high, yesterday's high, all the way down this low, we're sitting right here. We could see a move up into this area, about 50% retrace. Now, from the initial move down, this move right here, from that, that's the, we can really look from that, because that we have a, if you're looking from fib swing high to fib swing low, this is your high point right there, because we have a good fib retrace there. So from there to there, we're seeing, and I'm thinking we might see this guy come up here and try to get 49.60. Okay, and we've got 1, 2, 3, 4. We're into our fifth candle. Possible push up here to about 49.60. Then we have a 1, 2, 3 down strategy. Okay. And you can learn about the 1, 2, 3 down, or the 1, 2, 3 strategy that on our video page. I've got videos about how to do that. That's a very strong V shape coming up here, and that's being driven higher because of now Euro profit taking. Back up here to 13.75 area. You're right. And Lynn, from that standpoint, if you're looking at the daily or the 4-hour chart, now, you know, if you get that overall trend, now we're just looking for those pullbacks, and then get back in at the best opportunity back in the direction. Absolutely. Dr. Fibbo. I always speak more clearly with waffles. Go figure. Thanks, Mike. I do like my waffles. My wife makes some great waffles. So, hey Jerry, how you doing this morning? You do the same, Jerry. Have yourself a great weekend, my friend. Appreciate you being here. Cannot find out the extension level. Christina, they're already laid out for you. So, Christina, we're going to have another training Monday. I'm going to take some time and go back over the, someone was saying that that the new model we just released yesterday is slowing down their computers, So I'm going to have George run through it again and see if that could be affecting it. I don't know if it's taking more RAM or clock time or what, but I don't know. George isn't here, is he? I don't see George. Is George here? I don't see George in the room, so we'll have another look at it. But Christina, just send me an email to support@compassfx.com. Attention, Dean. See what we can do, okay? Yeah, okay. Yuko, I'll take a look at that. I thought we had all the bugs worked out. So just send me an email, Yuko, and I'll take a look at that. George is the mad scientist. Okay, John, your question is, why does my white open of the day horizontal line not match yours? Okay, because, let me ask you, which broker are you using? My man card is in the capital letters. You took me seriously on that man card issue, huh? That's great. Does your broker, let me ask you this, John, does your broker start at 5 p.m. Eastern? MB Trading. Okay, so find where MB Trading starts their day. I think they started at, was it midnight or was that Oanda? If MB trading is not starting at 5 p.m., that's why they're not matching up, and that's why the levels may not be the same. Okay. Unfortunately, in the forex market, land is midnight. Okay. MB trading uses New York time. Hello, is someone there? Thought I heard. Maybe that was Gene getting off the mic. Or maybe he was getting on. I don't know. When you say uses New York time, David, do they start at 5 p.m. Eastern then? Oh, okay. You're oh, their day changes midnight New York. Okay, so they're using New York midnight. That's why, John. That's why. Okay. And I don't understand why some of these brokers out there. This has been if there's one pet peeve of mine about the forex retail market, it's been that. Professional traders around the globe, institutional traders around the globe, they start the new forex day moving across the international date line. Basically, as you go into, like Craig Harris would say, as you go into Wellington, New Zealand. Okay, that's the start of the day. That's 5 p.m. Eastern. Is that you, Gene, on the mic? Okay, just, hey, Gene, is that you on the mic?
It might be. I'll turn it off. I thought I had it off.
Okay, I can't hear Gene. Do y'all hear Gene? I hear some rustling. Who's trying to talk?
Dean, it wasn't me.
Okay, I don't know. Somehow or another. Anyway, so I didn't know if Tammy was getting on to mention something or Janet. It wasn't me, Sonny. So it wasn't me either. What was I? I totally lost my train of thought. Well, I'll find it. What were we? Oh yeah. We're talking about the 5 p.m. Okay, so 5 p.m. Eastern, New York time. Okay, 1700 New York time, not GMT, but I'm talking about Eastern New York time, 5 p.m. is quote unquote the unofficial official start of the New York day of a forex day. Okay, because we're rolling across the international date line. For whatever reason, there are brokers out there, retail brokers that schedule at New York midnight, or they schedule it at GMT, or whatever time. I don't understand why. Why not set the retail world just like what the professionals do? If the professionals, majority of professionals across the globe, if it's Goldman Sachs, Merrill Lynch, Morgan Stanley, you just go down the list, are trading the Forex at the start of 5 p.m. New York, then why are there retail brokers out there? So I'm going to just suggest to you, write your retail broker and tell them, hey, I want my demo account or my live account. Now, they'll probably take more action on a live account, but I want my account at 5 p.m. I want to be like what the professionals are using. And so I don't know. I just don't make any sense to me why they would do that. But it happens. And unfortunately, majority of platforms, especially the MetaTrader 4 platform, you can't go in and you can't modify it. Okay, I'll take a look at that. Maybe that will help. Thank you, sir. Appreciate it. Why serious traders need the New York close on their Forex charts. Excellent. Okay. Oh, this article, yeah. From Niall? Yeah, I know Niall. I don't know him personally, but I know of him. He's a good guy. He does price action as well. Yeah, I know about Niall. He's a good guy. He's got some good stuff as well. Pin bar man. Yeah, and we do have pin bars. You can look for those. Called the Pinocchio nose, reversal bars, all sorts of stuff. I got one buddy, he says it's the market giving you the finger. So it's I just oh my goodness. Makes you think it's going one way. But if you trade pin bars correctly, they work. They're reversal bars. Be careful. Okay? When you get a pin bar and you think the market's going one way and it shoots right back, it is a definite reversal indication. And you're left standing there, you know, just taken if you don't know what you're looking for on those pin bars. That's when my friend told me that, I was just laughing nonstop. He does it all the time. He mentions that, one of my trading buddies. He just so you know, I don't do that sort of thing, and I don't curse and all that other stuff. But when he said that, you know, it's like it just made me laugh. But people do. They get taken by reversal bars. They're thinking it's going this way. It's taking off. I better jump on it. If I might miss it, and then it runs right back against them, and they get taken. So, all right, guys. It's 12:30 New York time. Usually I'm already done and wrapped up. Are there any final last questions about the room, about the dots? You see, there's an announcement up there for it. I'll put it. If you don't see it there, I'll put it back up again. If you're interested in the dots trade room, here's a link for it. Let me put that back up for everybody. So you have the dots trade room. There we go. So we have the dots method with the trade room. Okay. So if you buy dots, if you decide you want to add dots to your trading. And we've seen how the market has played off some of the dots levels today. You get 30 days here in the room that's added to it, no charge. I mean, that's part of the package. You get the ADR, you get the average daily range pro calculator, you get the sentiment meter that you see. I'll also include the dollar index indicator. You're going to get the master candle strategy, the bank trader strategy, and a number of other training tools that we use here in the room to help you in your trading. And like Mike said earlier, I do this so you will find a model that works and you work consistently. For me personally, at this point in my life, I've got these added things, but I want to show y'all something. There's a guy in the room by the name of Sonny, and he and I have really been working together since about October, November 2012, shortly after we released dots. And let me see if this is the one I want to show here or not. Yeah, here's the one I want to show. Okay. So if I could sum everything up and simplify it down for you, this would be it. This would be it right here. Okay. What we're looking for here in the room is a simple setup. Now, we've added some different things, but there's a very simple setup that we look for, and I'll share it with you right now. What we're going to look for is we're going to look to trade in the direction of the long-term guppies. These are these purple, red, and turquoise color here. So you can see it right here. And what we're looking for is, and let me change this up. I'm going to change this to the start of the day. So imagine, if you will, we're at the start of the day today. Let me change the template to the start of the day. Okay, so let me push this back. Okay, here's the start of the day right here, and these levels are laid out for us during the Asian Open. Now, the market traded back into the long-term guppies, and I've mentioned to y'all, we're going to look to trade in the direction of the long-term guppies. In the direction of long-term guppies. All right? So as we're looking to trade in the direction of long-term guppies, we can see that the market pushed up to a level. It went right to the buy entry level. However, it pulled back against us, and it would have stopped you out had you waited to enter right at the buy entry level. But it pushed back up, and then it continued and it pushed on up through the buy target number 2 level during the European session. We're just looking at this from the Asian session, okay? And we're looking to trade in the direction. I'm going to share with you a couple of techniques that will allow you to step in the market at a better price. And you already have these levels. If you treat these levels as levels, okay, they're high probable levels, okay, you can see that the market worked away, the short-term guppies worked away from the long-term guppies and pushed up. Now if we look at this, let's go to another time frame, because with the dots you have multiple time frames. You have the Asian open at 5 p.m. You have the New York open. So if I set that to true, let's go look at that. Okay, so here's the New York open. I'm sorry, the Tokyo, excuse me, Tokyo, what am I saying? Tokyo open. We see the market push up. Let me put it on the European open. I have the European open already ready for us in a template. It's already set for you. Now here's a good example of what I'm trying to get at, because really the move didn't happen in Asia. The move really didn't take place here. This is what I really want to show you, because the move actually took place in Europe last night. It's where the market, and this is something that we look for. We look for these lower highs coming across and to test in and compress into the long-term guppies right here. We get this compression in. The short-term traders, represented by the green, the yellow, the black, they're trying to turn the market the other way. And the long-term moving average, which represent the institutional traders, the big boys, the guys who have a lot in the market, a lot of volume, they're not budging. They're holding. If they're going to hold their ground, the only direction that short-term traders can make money then is long. They can't make it short. So then we get the push away. The market comes up, hits the buy entry level, sets there for a moment, and then pushes on up to the buy target number 2 level. Bounces around back and forth, and then we fall off, and that happened during the New York session. So here's a trade up, and I'm keeping this very simple. Anybody still with me here? I just want to be clear. Is anybody still here with me about this? Yes, okay, because I'm trying to keep it very simple for you guys. I mean, when we first started in this room back in 2012, actually 2013, February 2013, we started this room. This was what we looked for, all that we looked for. So we looked for this one trade up for 30 pips. We would get in here, and we would trade up to there. Okay, and I'm going to do it here in a moment for the New York session. But if we were here during the European session, that's what we looked for. Now, what we've taken what we've learned over the last 3 years, and we've started applying some additional strategies. Can we trade this more like an institutional guy? Instead of a retail trader waiting for us to get to a higher high, you know, here's the high right here. Instead of waiting like a retail trader, like the dumb money, and have to buy at a higher high, is there a way we can trade like an institutional trader? Trade more like what they do, letting the market come to them. Find that liquidity in the market. Find where there's all at. Well, they're all down here. Got some really good liquidity in this area. Is there a way that we can look at the market, find that area, get in at a better price or a better level going in the direction? And sure enough, we can. Look what the market does. The market comes down into this area of liquidity right here. Those highs, lows, and I'm not going to go further back and confuse you, but there's an area right here, right around that 55.80 area. And look what the market does. The market pushes up. So we could have literally gotten in here and then traded this up to this level here. See if it breaks it. If it does, look what it does. It comes back down and tests it and then pushes away. If we were able to do that, how many more pips would we have put in our pocket here? What's that? 12 pips? We could have added another 12 pips to our pocket right there. It may not sound like much, but now instead of 30 pips in your pocket, now you're looking at 42 pips. Okay? Now, that trade's done. We got 42 pips in our pocket. Now, the question I get from a lot of people is, are people really making about 100 pips a day in the room? Yes, they are. You just saw them make about half that amount right there. Now then, let's go to the New York session. Now there is the London session, but I'm just going to go to the New York session now. So we're going to go to the New York session. Let me find it here. There's the New York open. Oh, we have New York. There's New York. Now in this case, based on the 15-minute, we're going against the grain. Now there's a more extensive technique for trading this in the reversal. Actually, Tammy in the room is very good at this. She can identify reversal in the dots guppy very easily. Now what I'm going to do to try to stay in the same format that I just talked about going up, I'm going to step down to a lower time frame and take a look at what did we just talk about going up. Remember what we just talked about going up? And we talked about the compression of where all the liquidity was at. And we talked about how the short-term guppies were pushing away. So what we have is the possibility of entering somewhere right in this area we talked about, entering the market somewhere right in here. We need to see it break above that area. It tests, and it breaks. But we're already in right in this area. We're in this area, and we'll get into the details about that when you join the room. But you get up here. That was where that plus 12 came in right there. And then it came in somewhere up in here. We were somewhere at the buy target number 2 level of the dots, okay, for a plus 30. That's what we did, okay. Now then, look what we had. We had the short-term guppies above the long-term guppies. All right, now we're going to do the exact same thing, but in this case, look what we have. We have this double top. We talked about it. There's a top. There's a top. It's a lower top. It's made a midpoint. It's come back. There's a probability of a push down. Now what we need to see is keep this very simple. Just the guppies and just dots. That's all there is. Nothing else. We need to see the long-term guppies have decided to push lower. They've decided to push lower. There's what we call a long-term rollover. Okay? Long-term rollover. Now that didn't occur right at the sell entry level. That occurred down here. Okay? I understand that. Okay? But look what the market does. The market pushes back up. And there's a technique that when you have what we call an alligator mouth, which is right in this area, separation. So let's say we didn't get in here, okay, or we didn't get in here looking at the alligator mouth. We were waiting for maybe this to occur where we had the long-term guppies turning. Okay, now what we know about this is the fact that the market will go so far away from the guppies, then they've got the long-term guppies, and then they got to pull back. It's natural. It happens. Why? Somebody got in this guy at the right spot up here where I'm going to teach you. Somebody got up here. And the market has now moved from 56.26 down to 55.91. They want to take their, 35 pips there? They want to take their 35 pips off the table. And so they do. How do you take profit off the table? On a short, you got to go long. So now we have a little setup here. What we refer to as a 1, a 2, a 3, and now we're looking for a 4 setup back down. So let's say we enter not necessarily at 56.12 here, but this level right here is about 56.06. As a matter of fact, remember I entered at 156.03. Remember that? That's that ballpark area right there. Do you see that? That's about 56.03. I went in on this turn right there where I teach people to look for the turn. The long-term guppies, I want to trade in their direction. Now then, from 56.03, where I've got in at, down to this area of liquidity that we talked about, another area of liquidity down below here, they got down here to 55, let's call it 55, looks like about 55.60. What do we have here now? That's plus 40 if I got my numbers right, that's plus 43. So what do we have over here? We had a plus 42. What do we have over here? A plus 43 on one currency pair that doesn't have a very big range. Guess what we just carved out of this? Doing one trade in the Euro session and one trade in the New York session, we end up with 85 pips. 85 pips out of something that has an average daily range of 126. Keeping it very simple. Very simple. Okay? Yeah, go ahead, Mike.
Hey, Sonny just wrote in that using the dots, guppies, and the arrowheads, he's gotten over 500 pips this morning with no other indicators. And folks, in case you don't know, Neville is Sonny. So where he wrote up underneath Neville, Sonny's awesome, that's him. I'm ratting you out, Sonny.
I'm ratting you out. Sonny is phenomenal at this. And as I said, Sonny is a retired floor broker, 40-something years in the business. Okay? If anybody would know about trading and deciding what's one of the best tools to trade with, okay, of all the tools he could use, he uses the guppies. And then he said, Dean, I was having a hard time as where should I look to get out, or where should I look, well, actually not so much get out, where should I look to possibly get in and get confirmation and then know where to potentially get out at certain levels. And his comment, long story short, Sonny and I have had lots of conversations, and we kind of come to the conclusion that dots and guppies, put them together, it's like peanut butter and jelly. They just go together well. Now, I didn't bring this up, but you're right. There's an arrowhead right there. 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 There's another arrowhead right there. I don't know if that's an arrowhead right there, but let me see if there's an arrowhead right there. So on top of the two trades that I pointed out, there's 1, 2, 3, 4, 5, 6, 7 additional trades right there in the euro dollar. So anyway, guys, that's what we do here in the room. And very simple tools. There's two, now you might think that, well, there's a lot of indicators there. We don't look at all these the moving averages are a component, and dots is another component. And I just want you to know is how the market, look how the market played level, back to the open of the New York session, down to a level, down to a level, down to a level, bounce, push down to a level. I mean, look how it pinned right to a level. Now we pushed lower, and that's where then we look at some additional tools. Is there something else down here? And that's when I'll step in and we can do some measurements. We can look at, okay, here's the double top pattern or the M pattern, and it's got to go back to the floor. It went back to the floor right there. Or we add maybe the bank trader strategy to look to see if there was some other potential level down there that, there's some other potential something down there. Looks like didn't quite get to the high target, the weekly high target number 1. It's probably the liquidity that was coming in that area. So we add that to it. Boom, we're done. That's it, guys. You don't have to add any more to your chart than that right there. And now I see what the bankers are looking at. If we go beyond the dots levels, I see where the bankers are, what they're looking at. I see the dots levels. And then I just look for patterns. And I'm going to teach you the patterns and teach you the strategies. And I don't know, maybe Sonny traded from different pairs. I just showed you one pair, the pound dollar, this morning here, and there was 40-something pips in that trade right there, guys. Okay? And it has pulled back. By the way, if you're still holding, I'm holding a partial pound still, we have another potential setup back down right now. So we're not done yet on this guy. We've had a 1 pullback, 2 pullback. We're due for a third move down. We're due for a third move down before the day's over with. if we can get past whatever liquidity is sitting over here. Whoops, excuse me, I went one too far. You see there's this level here. I'm looking for the market to go to that level. That's what I'm looking for. And y'all got to, I mean, unfortunately, Sonny wasn't here on the mic, but pearls of wisdom come from Sonny. So we have this little area right here that I'm looking for the market, and the market tipped it, but I was really looking for it to go back down to that bank target right there. Like I said, there were probably some bids to buy it back up. So, was there a pound yen trade? Yes, there were some folks that took a pound yen trade up off of this right here. Let me go down the 5-minute chart and open it up, and we did have a potential trade right there. See the lower highs, the squeeze down. Institutional traders looking. It's not turning, so then we get a push and a play back to the open of the day, and now the market's really kind of just settled down right now. But yeah, there was a potential trade in that area at the time. It's not there anymore. Okay, it's not there anymore. Okay. Good question, David. Your question is, if the big boys use 5 p.m. close, why would you change the dots to the session open? Good question. Because the market will continue. If the market's going to continue in an uptrend, let's say, then what if it trades beyond a favorable intraday level? Because once it pushes beyond certain levels, now we're looking at weekly levels. And the institution guys, the big boys, they can sit in a weekly level for 3 or 4 days to get to it. Are you going to sit there and have a group of people manage that trade for 2 or 3 days? Or would you rather have a highly favorable level to reach while you're in that session you're trading? Now, like I said, if the market makes a strong move, and let me see if, like, for instance here, let me see here. Let me see if that pound Kiwi's one I can. Nah, it came back down. And that pound Cad's back up. Wow, what a move up on that. This thing just ripped up. Here, let me show you, like, okay, I'll just talk about the Euro Kiwi from the, let me just do the Euro Kiwi from the Asian, I'll just do it from the Asian session, Asian Open here. Here's from the Asian Open. Okay, and what I'm saying is, who asked that? I'm sorry. I'm trying to find who asked that just a moment ago. David, was it you that asked that? Okay, yeah, David. Okay, David. In this case, David, we see from the open of the New York session, okay, and it did level. They played the levels. See how it kind of bounced on that level, then came down, shot through that, and back up, probably coming down to get to these lows here. Back, test the ADR. Now we're kind of been playing in that area there. You could have left those on. But we have days, though, when the market continued pushing on down. So if the market stays, and I've told people, if the market trades within the Asian range, you could stay in that. If you come now to the European session, here's the European Open, and let's say you don't trade the Asian session. Let's just say you're stepping in during the European session, okay? Well, notice how the dots updated, and notice that, look what I showed y'all earlier. Look at this. Look at that right there. Right from the open of Europe, you could have entered on a alligator mouth, separation, rollover, all right there, and been in this trade at that point, or you could have just waited for the sell entry level, and look what it traded right down to. It just gives a little clarification, and it's designed because we had traders who would say, David, I don't trade Asian session. I'm not even looking at those levels. I just want to trade Europe. Well, what does Europe tell me that Asia doesn't tell me if the market pushes beyond? And and we don't really have, I'm trying to find, do we have a, So we have a pair. See, all these pairs move back in today. It's really a day, whoops, excuse me. It's really a day when, like we had yesterday, when the market pushes way away from the dots levels. Do you go from session to session? So if the trade's beyond the buy target number 2 or the sell target number 2 for a session, okay? So if I were to go back here to that, where's that Euro Kiwi? So let's say we were, let's go back to the Asian session. Let's say in the Asian session, okay, David, you still there? If in the Asian session we broke down and we were breaking even lower down here, okay? You there, David? Just want to make sure you're there with me still. Yes, okay. So David, the idea would be is if you just traded New York, and that's and when we first, the close of New York, if you just or the start of the Asian session, and this is what we had when we originally designed dots, okay? But then we had people say, well, what does it look like in Europe? And what does it look like at New York? And so we went to work on it. But the problem we ran into, if we only look at the Asian session, what if the market just keeps going down and down and down? Would you say we could potentially be missing out on some dots trades right there? Could it be possible that if we went to New York, that this guy, if the market kept running down, okay, and then the market, we saw this push down, maybe if we came in during New York, and New York is, let's say, yeah, New York is like right here, the start of New York. What if this now is actually the sell entry? And this now, this area right down here becomes the sell target number 1. And this guy down here becomes sell target number 2. Do you follow me? That's why we go from session to session. My take on it is, if I'm in a trading session, and let's say, for instance, if this is the Asian session and we're just bouncing up and down, no reason to change it. But if it goes beyond the sell target number 2 or beyond the buy target number 2 up above, and we're continuing to trade in that direction, I need to update dots. I need to bring it into this session to identify high probable target levels, high probable entry levels. Does that make sense? Okay, so that's why I do that, and that's why we have it. And I suggest anyone that if they're trading, okay, so let's say this trader, let's say someone here said, hey, I'm doing a sell entry on this in the Asian session, and he drops below here, and he's hanging on to this trade. So he's been hanging on to this trade since right around Tokyo. That's the start of Tokyo. He's been hanging on this trade. He didn't get stopped out because there's the stop out. There's the stop loss level. You see that? That's the sell entry level. That's the sell stop loss level. So he didn't get stopped down. So he's sitting, holding this trade, holding this trade, holding this trade. Okay, now Europe rolls around, and he's below. Well, is there any indication what's going on now? So I'm going to change this to the European Open. Again, now, oh, wait a sec, hold on. I should have marked that on the chart. Go back, Asian session. Well, if I change the template, let me see here. Okay, so here's the sell entry right there. Here's our sell entry. This is where we're at. That was where we sold at. That's our sell, or we sold at. Okay, here's our stop loss up here. Okay. Now what I'm going to do is if I can do it, I'm going to, let me see if I can do this. If it'll let me, I don't know if it's going to let me. Anyway, let's mark this. It was 79.11. That's my sell entry, 79.11. For whatever reason, I can't do both drawing on this and change this. So 79.11 was our entry. Now watch this. Watch what happens. I'm going to go to the European Open. Look what becomes my stop loss now. It's not 79.11, it's 79.12, but look what we just did. What was our entry is now our stop loss. So now we're at break even. Do you remember? We sold here. So we sold. Now the market's way down here. Now it's telling you now that is now our stop loss level. So we've gone from a sell entry, now we've locked in. Okay? And we're at the sell target number 1. And we're looking for the market to go down lower. Okay, so you wouldn't see the New York session. By the way, I mean, look at the crap we've dealt with this morning. That is a good indication of what we've had to deal with this morning. That's New York. If I gave anybody the opportunity to trade this or to trade this, which would you rather trade? Everybody wants to trade a nice trend. No one wants to trade the chop. We traded the chop today and still took some pips out of the market. But anyway, so let's move to New York here. So again, 79.11 is where you got in at. You've hit a target. Oh, by the way, where you entered and where it's sitting at is 86 pips. Do you see that? And look how the market just gyrates around that guy and sits at it right now. You cannot tell me, I keep saying that. I don't mean to say it that way, but people are like, I don't know if this dots thing works or not. I'm like, are you kidding me? Look at the levels it's giving you. Look where the market's settling at. Hours afterwards, the market's right at it. It's amazing. It's absolutely amazing. Okay, so with that in mind, let's go to the whoops, take that off. We'll go to New York, and I'll try to wrap up with this here. But there's New York, and you can see the crap we've been in today in New York. Just absolute crap. Crap, I tell you, crap. It's just, that's hard to trade. That's very hard to trade. And why that is probably if you go out and look at it on the hourly chart, we're sitting in an area of liquidity in the market. Here's lows over here. Here's some more lows right there. We're sitting in an area of buy limits, trying to buy it up. At the same time, we're sitting up, here's our sell limits coming across up here. So we have liquidity. We're in this range, and we're near the bottom of a range here, and it's not willing to break right now. So inconclusive. So that's kind of holding it. If New York comes back after lunch, now that Europe is closed, Asia's closed, and the New York guys want to take a bit more profit, push the market some, then I'm going to be looking for a drop down. Okay. Now, where were we at? We were at 70. What was it? What did we enter at? Where did we enter at? 79.11, right? Was that where we entered at? I'm trying to remember. 79.11. We entered at 79.11. So we entered at 79.11. This is why some people in this room only trade one pair or two pairs. They just keep working it. We're in at 79.11. We're down here at 76.92. Okay. All right. And what if we get a breakdown to 70? That's a lot of pips there. Am I counting that right, guys? Am I counting that right? Let me get my calculator out. You're welcome, Ricardo. So, what's that? Is that 300? No, it's not 300. That would be 79. 79, 76. That's 30. Is that 30 pips? No, that's 30. That's 300 pips. Yeah. 300 pips. That's why when you hear people talk about they're pulling 100 pips out of the day or more. I'm not saying you will. But if you walked dots just like and nothing else, dots and guppies, walk just that. If we do get down here, I'm just saying if New York comes back off of lunch and we break this little area here and break through liquidity and we push down to a target that's already been calculated for us based solely on price, and you got in up here, that's a 300 pip run. I'm telling you, 300 pips, for some people, that's their month. And that possible for a day. So, anyway, guys, You see the dots there? You see the trade room. Thank you for attending. I appreciate everybody. And if there's no other questions, I'm going to wrap it up for the day. It's been a fairly decent day. It hasn't been